Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, August 26th. We are live. We're back in the studio. We're late, as always, but we are back in the studio, officially back from Miami. Thank you, everybody, for being here. Could not do the Market Open yesterday because I kind of lost my voice after talking 7 hours straight on Saturday in Miami at the meetup, which thank you to everyone who showed up for the meetup. I talked a lot about the meetup recap last night on the market close. So if you you can go to that stream and kind of see all my thoughts and perspectives from that meetup. But it was a very, very, very special meetup and deeply, deeply was appreciative of everyone who was there at the meetup. But I talked a lot. And so my voice is still a little raspy, trying to get it back to normal. But yeah, yesterday morning, I just realized I could not talk. But we're here. We're live. And we are ending out the final week of August, which is kind of crazy because in a couple days, we're done. I mean, August 26th, we got 5 days left of the month. And then we are headed out to September through December, 4 months left of the year. And then we got 2026, which means we have a lot of work left in the stock market for the next 4 months to end out to the 6,800, 7,000 S&P 500 targets that people have. And I think it is possible, but there's going to be a lot to analyze in the meantime to get to those targets. And so we'll be doing that every single day on the show as we go forward. Roy says you can blame any mispronunciations on the raspy voice today. Okay, good. So today I have at least somewhat of an excuse to get there. Thank you all for being here. Very, very excited to get back to the show, get back to my routine. Again, really hate when the routine gets messed up and we can't do the show in the morning and the afternoon as always. But during Miami, I mean, we pretty much did the show every morning. We only missed 2 shows in the afternoon. And, you know, those afternoon shows, you didn't have too much market movement because everyone was waiting for Powell anyway. And we got to see the Powell pivot on Friday last week, which was the most important thing. And then we got to do the Miami meetup. And so messing up the routine a little bit for the meetup to me is worth it because it was a very, very special event and very, very grateful for everyone who showed up. Having said that, today should be a fun show. So we have Tom Lee, who is going to be on the show today. I'm not trolling. He's actually going to be on the show. He'll be on at 10:30. And we'll talk to him about the nature of this market, BMNR, Ethereum. I did buy some BMNR yesterday. I'll talk more about that. But I did buy 100 shares yesterday at about 51. Right now it's at 49. Ethereum's down a little bit. So trying to get that into a real position. We'll go deeper into kind of my thoughts on Ethereum as a ecosystem or as an asset from a risk reward perspective. I'm starting to think it's one of the better risk rewards in this market. And so some of the derivative plays against it, like a hood, but some of the more hyper specific derivative plays like an SBED, BMNR, maybe not the worst options if Ethereum is going to have fun. So we'll talk about that. We'll talk about this V-shaped rally. We'll talk about if this bull market is truly becoming a new quote unquote bull market versus a bull market that is continuing from 2 years ago. And we'll also get his thoughts on how this market is able to persist, maintaining this multiple in the face of things that from a macro perspective are a bit challenging, whether it's the lack of rate cuts. We know we're going to get 1 in September. The question is if we get more than 1, whether it's inflation potentially being sticky, and whether it's the central bank being questioned for its independence, which is the main headline I think we'll start off with from last night, which is around the letter that President Trump sent to Fed Governor Lisa Cook. So we'll talk about that, go deeper into it, and then we'll see how this ends up all playing out. All right, there you go. Thank you, everybody, for being here. We are back on the Market Open. I missed you guys. It's been 3-4 days, been too long, but we're back. Excited to be here. I am moving out this weekend officially. So September 1st, we will have the first live stream from the apartment. It'll be a Labor Day live stream, I guess you can say. It's not going to be a market stream, but we'll be in the stream and we'll just talk about life and all that stuff, and we will keep going from there. All right, cool. So let's get started with what the heck happened last night. So I think at around 9 p.m. last night, Trump sent a letter to Fed Governor Lisa Cook, who is being accused, allegedly, of committing mortgage fraud. There is no official court judge that has reached a verdict that she has committed mortgage fraud. So I'm saying allegedly because that right now she's technically innocent until proven guilty. But Trump is not waiting for her guiltiness to be proven via a court. He said, hey, you're out. you're getting fired. And so this is the first time in history that this is the first time in history. I was surprised to see it last night, but it's true. First time in history that a U.S. president has fired a sitting Fed governor, or at least attempted to fire a sitting Fed governor for the basis on a quote unquote for cause. And a for cause is just like, hey, like if you committed mortgage fraud inside of your job as an executive, you know, the board would fire you and they would have a cause to fire you. Trump is using a clause from a legal perspective that says, hey, there's some type of negligence here, maybe even criminal negligence, and as a result, she should be fired. However, Lisa Cook came out and said, quote unquote, I will continue to carry out my duties, and that President Trump, her lawyer said, has no authority to fire her. So this is quite interesting going back and forth, and I don't know how it's going to affect the markets, but nonetheless, this is going to be something that we have to pay attention to, because theoretically the markets may say, hey, central bank independence is going down because of this. Other parts of the market may say, well, what are you talking about? She committed mortgage fraud. She deserves to be fired. Not really sure. And I think that's why we have a little bit of a pre-market red right here, because the markets are thinking, okay, maybe she does deserve to be fired, but we've just never seen this happen. So what does it mean for a Fed governor to be replaced by someone that Trump wants and potentially have his version of the Fed governor, aka someone who's going to be dovish, just plopped in to the Fed governorship and getting rid of someone who is not someone that he theoretically was happy with in terms of their votes for rate cuts.
Attack on Cook is political, part of an effort to strong arm the Fed into lowering rates. If the president's removal stands for the September Fed meeting, the Board of Governors would have only 5 of its regular 7 members: Chair Jay Powell, Vice Chair Jefferson, and Governor Michael Barr. Those were appointed by President Biden. And then Vice Chair for Supervision Michelle Bowman and Governor Chris Waller, appointed by Trump. The president has nominated CEA Chair Stephen Miran to a vacant spot, and replacing Cook would give Trump a majority on the board. Fed probabilities changed only slightly in the wake of the firing. September remained an 82% probability of a cut. But there was a slight increase from 42 to 34% earlier in the evening for a second cut in October. A Trump board majority would also open the possibility that the president could eliminate the 12 Federal Reserve District Bank presidents, 5 of whom have voted any one time, effectively giving the president full control of monetary policy. Coming up for a bracing event, look under the hood. Hey, Frank?
All right, so Steve, I know you've been up all night. I know you've been working the phone. So a couple questions for you, if you don't mind me throwing a few.
Is that so obvious, Frank?
I just know how diligent you are, Steve. A couple questions for you that I think investors in our audience really want to figure out. First off, the legality. You pretty much answered it, but is this legal for the president to fire a Fed governor, and has it ever happened before?
It has not happened before, and I'm in the middle of reading a whole bunch of stuff on this, Frank. Obviously, there's the Scott Alvarez viewpoint, Frank, which says there has been no process. Even when President Taft, I believe, was the first president to fire any officials under for cause, I believe on the last day of his presidency in 1912, it was a result of a commission that looked at these allegations. There has been no due process, so to speak, but whether due process is necessary here is unclear. The Supreme Court.
So again, there's not really that much precedent from a legal perspective on if this is possible or not. And that, I think, is the question that the market's trying to figure out with, like, hey, does this matter? Dylan says, in terms of rates, short-term bonds will rally, long-term end balls will fall, causing the curve to steepen. Doubt it will affect stocks much, maybe short-term volatility. I kind of think that's how it's going to play out as well. We saw a little bit of that last night as well. You know, I think the 10 years up a little bit right now in the pre-markets because of this. But yeah, 10 years up like 0.06%. Do you really sell off Nvidia because of this? I mean, that's the question that we repeat to ourselves, right? Do I get rid of the AI revolution names that I'm deep in if I bought in a year and a half ago, or even if I bought in 5 months ago, because of Trump firing Lisa Cook? Probably not.
Has allowed the president to fire officials at other agencies, not necessarily for cause, but actually in that same ruling singled out the Fed as being different. How it's different is unclear. So we have several questions, Frankie. You raised the right one. Has this ever happened before? No, not with the Federal Reserve. Is there even much precedent for cause dismissals? No, not really.
This is what Lutnick had to say about Trump firing Lisa Cook.
Secretary, I do need to pivot to a different question around Lisa Cook, governor at the Fed, who has been fired by the president for cause. She says she's not going and that he doesn't have the authority to do such a thing. You're obviously in the administration, close to the president, also understand how the wheels of just the machinery of the government work. Who pays her paycheck, for example? Is that something that has to come directly from the Fed? Is that something that Chair Powell will have to turn off, if you will? Does she have a pass to get into the building as somebody turns on or turns off? And who does that?
So, yeah, I don't know the details of who has her paycheck or not. But the issue is a federal government, a governor of the Federal Reserve, literally signs her name and commits mortgage fraud, right? It's alleged that she's committed mortgage fraud, and she says, I'm not going anywhere. Well, the crook always says, I'm not going anywhere. And why would anybody defend that? The real question should be, did she commit mortgage fraud, yes or no? And if you did commit mortgage fraud, please get out of the federal government, get out of the seat of the governor of the Federal Reserve, and go away. You don't deserve to be there if you've committed mortgage fraud. Right? It's black and white. If you've committed mortgage fraud, you shouldn't be a governor of the Federal Reserve.
This is a domino effect. One of the reasons I'm asking you this question about who needs to turn off her badge or turn off her paycheck is if the answer is that ultimately Chair Powell is the one responsible for that and he chooses not to, then the secondary question becomes, does the president try to fire him for cause?
By the way, this is an important question because Trump has an ego. And if Lisa Cook stays on the board and she doesn't get fired after Trump just publicly told the entire country he's firing her, that's undermining his ego. And we know what happens when Trump gets his ego undermined. He starts to act out, right? And maybe he goes after something even greater. So, I mean, this is going to be something where you get the popcorn out and just see what the heck's going to happen. But I don't think Trump's going to let this just fly with her saying that she's not going to leave the Fed board.
Well, these are all what if scenarios. The answer is the Department of Justice will go take this on and deal with this. But the fact is, if
that's code for Pam Bondi is going to get involved.
This woman committed mortgage fraud, she should be respectful to the United States of America, to the Federal Reserve, where she says she cared about them, and she should go off into the sunset and hope to God the police don't follow her, right? Mortgage fraud is a serious crime. We can't have mortgage fraud in America, and you surely can't have it for your leaders. I mean, imagine anyone in the cabinet who did this. You guys would be calling for their head. This woman should go away if she's committed the mortgage fraud, and those signatures sure as heck look like hers.
All right, so that's what you got. I mean, look, I put a poll right here in the chat. 54% of you said yes, it affects, or Trump will actually be able to fire Lisa Cook. 46% of you guys said no. I have no idea. Does it actually affect the market is my question. My gut says no. My gut says no. This is going to be some political hoopla we have to do. Well, this is not Jay Powell. It's one step under Jay Powell. So like if it was Jay Powell, I think it would affect the market, but it's not Jay Powell. And thankfully Powell gave us a nice little pivot on Friday. By the way, that secret meeting that Trump was going to have on Friday, that secret announcement that I didn't stay live to watch, it was about FIFA and the World Cup. So thankfully we didn't stay live it started like an hour late and it had nothing to do with Powell. Now, maybe if Powell was hawkish, it would have started an hour early and it would have had to do with Powell, but it was about, it was about the World Cup. So look, the point is Powell gave Trump what he wanted. Lisa Cook, Trump wants to get rid of so he can have more say on the board of the Fed. The question becomes, is this for cause precedent, which historically has no legal precedent to be able to be enacted, going to go through? And I have no idea. I'm just going to be sitting and watching, and I think all of us will see. Is it actually going to affect the stock market? I don't really think so, but it is one of the biggest stories that broke last night, and now we're going to see how Trump ends up trying to get the Justice Department, as Lutnick said, involved. And we're going to see how that ends up playing out. So that's what we got from the Trump Fed governor storyline that is now likely going to last for a while. SoFi. So this stock had a nice little run yesterday, closing above 26. Right now in the pre-market, 26.30. I did buy some SoFi yesterday for the first time in a year. I bought shares, bought 50 shares yesterday, nothing crazy. If you guys were watching the podcast with Tanner, Roy, and I, Tanner was saying all these things. I was like, you know what, Tanner, you make me kind of bullish. And so I bought some SoFi. But in all seriousness, look, the rate cuts are really bullish for SoFi. Obviously, we've been talking about that for a couple of months now on how rate cuts will exacerbate their business. And the second thing that's really bullish about SoFi is that the rate cuts should be a tailwind not only for top line revenue growth, but also for operating leverage. And operating leverage is kind of the core element of a company getting a multiple, because that means their net income margins, their adjusted operating margins, all that should go up, and that their multiple on earnings as a result of that should go up. This is exactly what we saw happen on Palantir and exactly what we saw happen on Robinhood. Robinhood's operating margins are almost 40%. Palantir's at like 45. It's a big deal. When you have those types of margins, you can really drive a lot of that revenue down to the bottom line. So the question I asked Tanner and Roy, which is the question I'm going to ask you guys right here, is can SoFi pull a Hood or Palantir? Meaning it doesn't have to get to like 100, 150 bucks. Let's just say this. Can this stock get to 50, 70 bucks? Call it by next year? Could it get to 35, 40 bucks by the end of this year? Am I being too ambitious here? And when I asked Tanner that question yesterday, he was like, well, like you're pulling a lot of growth forward if you go to 40. I'm like, yeah, but that's what we did on Palantir and Hood. When they went from 7 to 25, everyone was like, okay, that's the move. Boom, you got your 3x. And then they continued to just go higher and become the investments that really have changed people's lives. And already SoFi has changed so many people's lives in regards to a lot of people that are using options. I mean, my dad has 8 calls on SoFi, $10 strike that he bought when it was $7. So like SoFi's done very well for a lot of retail. Retail's been heavy in this name. But I wonder if buying at 26 isn't scary, and this thing is just beginning a move that's going to be very aggressive. I don't know. Like, I actually really don't know. The reason it happened for Palantir and Hood is not only the operating leverage, they had really just like company-oriented catalysts that weren't even attached to growth, but just qualitatively, you could see these companies were just running away with it, and then the growth came after. Could that happen to SoFi? I can't say it can't. And so the question is, would people kind of double down on it if it did happen? 58% of you say yes, 41% say no. So I agree with Rob's comment right here. The way to 100% guarantee that SoFi could, or at least SoFi has like a reasonable chance of pulling a Hood or Palantir in terms of its stock move, is right there, Galileo. If Technisys and Galileo can start compounding at 25 to 30%, right now they're growing at like 15%. And Noto said Q1 2026 was good, but what if he's sandbagging? What if it's going to be really good? Or what if it's going to be Like that could re-rate the stock, which is what I'm saying. The stock needs a re-rating, and it's already had a re-rating. So the question is, could it have an even further re-rating? I don't know. But if it could, then obviously that would be very exciting for shareholders. I think the biggest thing right now is getting above 28 bucks. 26.30 is right here. If we can get above 28, I think it's going to be very exciting. 28, 21, I think is that all-time high. So if that could happen for SoFi, I think the market would be exciting. Opendoor. Let's spend 5 minutes on Opendoor and what's going on. Here's Eric Jackson yesterday on why retail and the board of directors need to be embraced together for this quote-unquote golden opportunity on Opendoor.
It's a golden opportunity. It's sitting there in front of them. To this point, they've really only trampled over it. And we're kind of doing it in spite of them, not with them. Imagine if they actually locked arms with us. The way that Alex Karp does video earnings calls, takes questions during earnings calls from retail. I mean, I told Adam Bain, who's the former head of sales for Twitter, who's now on the board, he's a venture capitalist now. I told him before the earnings call, the last one that Kerry did, you have to do the same things that Alex Karp does. You got to take advantage of this opportunity. Either Adam didn't pass it along or Kerry ignored it. They did the traditional hide behind an audio-only earnings call, 30 minutes in and out. It was just abysmal, and that's why she's gone.
Are you trying to get on the board?
I am.
Okay, so my quick thoughts on Opendoor here. This stock pumped to 587 yesterday, then dumped all the way down to 450. Now it's at 464. I talked a little bit yesterday on the market close. My thing about this stock is that the FOMO is going to be aggressive, very aggressive, if this thing really gets to run. I mean, I think we saw it yesterday when it was at like 580. I saw a lot of screenshots, way too many screenshots of people dumping in at 530, 540, 550, buying calls, just like getting into. All of them got wrecked by the end of the day. Now, that doesn't mean that they have to stay wrecked, but that entire move disappeared for seemingly no reason. I mean, I don't think there was any fundamental news that happened last night outside of the Fed governor stuff, but that was like hours after the Opendoor move for why that would happen. And I think it's just because people were like, okay, that's our move. Let's dump it, right? Like there's no real reason they're buying it or holding it long. It's for the nature of the meme, right? The ability to just say I'm an Opendoor shareholder and like YOLO, like go Opendoor, and that results in a lot of selling as well, as much as it results in buying. Roy says, I feel they're going to do a capital raise and take advantage of the opportunity and do very little with it. I think taking doing dilution right here and doing a capital raise probably would be very strategic for them. Their stock was at 50 cents. Now it's 10x higher, right? So they should be able to raise a lot more money. And theoretically, doing that capital raise would also raise their book value, right? Because they would just have more cash in the balance sheet, even if they have more shares outstanding. But I don't know, as Roy said, will they do anything with the opportunity? If they actually raise like $1 billion, will they actually be able to turn the business around? And that's why I haven't touched it yet from an investment perspective. From a gambling perspective, I haven't bought any either, but I don't blame anyone who's just, buying 1,000 shares or whatever, just to have fun. And, if it goes up, it goes up. If it goes down, you're okay with losing that money. From an investments perspective, when I was in Miami, I actually talked to a few wealthy people there. And I was like, what do you think about Opendoor? And they were like, dude, like what, the AI is going to help them paint homes faster? They're like, this is not a good business. It's just not a good. You buying a house and selling a house is not the best business in the world, especially at the scale they're doing it at. And one person told me Opendoor, he had a chance to invest in Opendoor in the private rounds back in, I think, 2017. And he passed on it because he was just like, wait a second, these guys are trying to time a cyclical market. Real estate has always been cyclical. It is literally dependent on the cycle of rates. There's a good time to buy a home. There's a bad time to buy a home, and rates determine the capacity for the housing market to be intact. Now, stocks are also cyclical theoretically as they're contingent on rates, but we've been in a bull market for the past 16 years where rates were at zero. Now rates have been rising, and thankfully we've had this tailwind of AI to kind of mitigate the effects of rising rates. But housing has had a much different story from that. So he was like, this business model never made sense to me. It makes sense that they went public and they weren't able to hold their stock price for more than a year without collapsing. And so he's not touching it. And so when I listen to Eric Jackson and all these guys talk, the only thing I hear about is them saying the stock needs to go up, not saying anything fundamental about what will change the business model. Amit, what did Derek say? People have to stop gambling. Yeah. I mean, Derek's not in this, bro. And trust me, Derek can have his degen side to this stuff, but he was just like, dude, it's real estate. Like there's no margins in this. Like, so my perspective is Eric Jackson and all these other people are coordinating a classic pump and dump. Now, maybe they're going to dump it at 82, and they deserve to dump it at 82 if they can pump it all the way up to 82. But I've listened to a decent number of their interviews, and I've tried to hear what they are saying should be done to change this business, and none of them are saying anything that's meaningful. Maybe I'm the biggest idiot when it comes to understanding this story, but I can't hear a single thing they're saying that would actually turn this business around. Now, the new CEO coming in could pump the stock because maybe it's a retail-friendly CEO. Maybe it's a CEO that embraces retail like Carp and Vlad, and they do a video call and all this stuff. Maybe they really build some meaningful community and they actually change the underlying dynamics of the business. I feel annoyed when he compares it to Carp and Palantir because there's a real business underneath Palantir. So when they do a video call, it's first of all, a good thing for them to embrace all their shareholders, retail or institutional, but they're embracing their shareholders via video to talk about results that are very good because there's a real business. So Opendoor doesn't want to do a video call because they have crappy results like a lot of companies, and they don't want to they don't want to deal with the scrutiny of that because the results aren't good because the business is fundamentally broken. And so, comparing it to Robinhood or Palantir to me just doesn't make a lot of sense if the business itself doesn't work. Like at the end of the day, you could hate the valuation on Robinhood and Palantir, but the businesses have executed over the past 2 years. That's why this community has been formed around them. With Opendoor, the community is literally people buying it and holding it for the sake of holding it. And the difference between this and GameStop and AMC is GameStop and AMC were shorted 150%. I don't know if AMC was, I think it was like 90%, but GameStop for sure was shorted 150%. It was so egregious that the hedge funds were taking advantage of this company that Roaring Kitty led this movement to go against the big bad man and like really get retail to rise to prominence because of the hedge funds shorting. Opendoor is only shorted 23%, which is a lot, but it's not like the hedge funds are like, we're going to make this year's quarterly numbers by using Opendoor to short to get our results. And, it's not like the hedge funds are so obsessed with Opendoor that this is the only stock in the market they care about when it comes to shorting. I mean, there's a lot of different shorts in the market that are possible. So I don't see the retail movement. I don't see the story. I don't see the business fundamentals. All I see is a guy who, at this point, is getting just creepy, bro. Sitting outside of Drake's house every single day. Like, it's weird, bro. Like, it's weird. It is just I don't know, dude. It gives me the icks. And I'm just like, I kind of want to buy it for the sake of how much he's attempting to pump it. But I also don't want to buy it because he's attempting to pump it to such an extent. It's like, if you have to go to Drake's house to say buy Opendoor, I don't think there's anything fundamental in the business, dude. When I started covering Palantir, I didn't show up to someone's house every day and say, you should buy Palantir at $7. I was like, no, let's analyze the press releases. Let's do a Palantir weekly podcast. Let's be normal about analyzing this company. And hopefully one day the street recognizes, if the company grows and lives up to the expectations that we have for them, that they deserve a multiple. And that's what he should be doing with Opendoor, not like trying to go to someone's house and say you should buy the stock. And if you tell Drake to buy it, Drake doesn't know anything about Opendoor. So Drake would be buying it to sell it at $10. So Drake would be pumping it. It is just so unbelievably egregious to me. And I don't understand how anyone in the Opendoor community can justify this. I'm just like, what are you smoking? Like, are your returns so bad this year that you need something to pump up? Is that what's going on? Or like, how do you meaningfully say this is a okay thing to do? I don't know how the SEC is letting this happen, but I guess Trump's SEC, anything can happen. So to me, I don't want to be part of the story. I really think this is just weird. And the question is going to be how this ends up playing out. But as of now, it just does not feel like something that I'll be part of. But look, if this thing rallies to $7, a lot of people are going to chase it. And if a lot of people chase it, then, people will be continuing to buy it. So if you're in it, I hope you do well. I hope you do well. I do not want to see this thing go to $1 and see people lose a lot of money, especially because this thing is happening on Robinhood. So now, granted, if it goes to $1, Robinhood still makes money on the volatility. But Opendoor was the second most traded stock in the options market yesterday, and had 800 million shares traded on Friday. I mean, dude, I think a majority of this is happening on Robinhood. Like 2 million contracts, I would say like 800,000 of those, 900,000 of those, almost 50% are happening on Hood. Imagine it's more than 50%. This one stock alone is going to be incredible for Hood's Q3 earnings. So I love this for Hood. But I hate this because it's giving retail a bad rap. Unless this company turns things around, which maybe they do, and maybe I'm missing the part where they can actually turn things around. If this company just becomes a company that doesn't do anything with this momentum and quite frankly doesn't have the business capability to turn things around, and it's purely led through a pump and dump, then it looks crappy for retail. But it is what it is. We're going to see how the story ends up playing out. All right, so that's what we got on Opendoor. In terms of Nvidia, so let's talk about that for a bit. We do have Nvidia earnings on Wednesday. I'll be live with Tanner and Jose. That is a big one. Nvidia right here, 180.57. That is up 0.42%. There is a narrative for some reason that is forming right now about CapEx spend being down, and you can kind of see in the mainstream media and different articles that are going viral that AI CapEx is not that important. I mean, you got some JP Morgan analysts saying data centers will be worthless in the next 5 years. I think all these people are just dead wrong. And I don't know why this narrative is forming. I was talking about it with Tanner and Roy last night, and Tanner's argument was like, maybe there's some hedge funds that really are trying to get cheaper shares of Nvidia. But these are weird narratives that are forming in the face of the earnings that all of us saw, right? We saw those earnings from Microsoft, Meta, Google, and Amazon, which is CapEx is just going higher. And the reason CapEx is going higher is because of the level of growth that these companies are putting up. Take a look at this chart right here. Earnings of the Magnificent Seven companies have surged 145% since ChatGPT was introduced in November 2022. So for everyone saying there's no ROI on AI, I mean, you're looking at an almost doubling of EPS from the Mag 7 companies since ChatGPT was introduced. ChatGPT essentially being a metaphor for AI, which is also a metaphor for CapEx, because the reason ChatGPT requires so much CapEx is because those models are very expensive to train. And the more and more data centers you put up, the more and more you have better models that can ultimately train. So this is 2,134% growth in the past 10 years for the Magnificent Seven. The other 493 companies, as you can see in the black line on the bottom, they've grown, but not grown that much. They are still waiting for AI to show productivity and margin enhancement inside of their earnings. And that's going to happen. And we've already seen some hints of that over the past 90 days with some of these quarters coming out and some of these companies really showing momentum in their earnings based on margin enhancement from AI. So Nebius, CoreWeave, all these names that are leveraged against data centers, I don't think those names are going anywhere. I think they're just beginning. Now, you could say some of them are a little bit expensive, that's sure, and that's based on the valuation you want to pay for them. But to say they're all in a bubble And all of these things are not going in. I mean, we don't have enough energy to support the amount of data centers that we are putting up in this country. And every time you put up a data center, it gets swallowed up by a hyperscaler immediately. This is why Iran, which was a Bitcoin miner, has been having an incredible run. This thing was like $11 5 months ago. Now it's at 22 because they've got contracts with hyperscalers that are using their facilities that were supposed to be for Bitcoin mining. And they realize Bitcoin mining is not the best business, but this AI data center stuff, that is a really good business. And it's not going anywhere anytime soon. So yeah, I think anyone worrying about data centers and CapEx, you shouldn't be that worried. Like the numbers are pretty obvious. You can go through the earnings again. I went through the earnings again last night. I looked at some charts around CapEx spend. It's pretty aggressive and it's only increasing as per the guidance that we got from Google, Microsoft, Meta, and Amazon. I mean, this was in April, this chart from April, so it's not updated for July. But even back then, Microsoft, 83 billion, Google, 52 billion, Meta, 44 billion. That was just in the year-to-date numbers in terms of CapEx. Like the lowest one is Apple at 9.4 billion. And who knows, maybe Apple will start spending more as they get deeper into AI. So I think Nvidia is going to crush it. I think they're going to have a great quarter. The question is going to be if the street's going to be able to give them the multiple. And if they do continue to give them the multiple, Nvidia is going to be inching near a $5 trillion company, which is going to be very, very exciting to see. One thing Nvidia introduced yesterday is their new humanoid brain called the Jetson Thor. And essentially Meta, Amazon, and Figure, which are humanoid robotics companies. Meta has not really gotten to humanoid robots, but I guess maybe they are based on this press release, are early adopters of this. It retails at $3,500, and it is a new humanoid brain powered by Blackwell that you can immediately put into a robot to offer 7.5x more AI compute and 3.5x more energy efficiency. It's just verticals on top of verticals that's going to be leading, I think, to Nvidia continue to gain momentum, which is obviously very, very exciting to see. Nvidia right here in the pre-markets is at 180.65. So if they have a good quarter, I think the rest of these companies are going to follow up going into Q3. And as a result, if you have earnings growth, crypto deregulation, lower rates, and hopefully inflation staying steady, I think you end out the year probably higher than where we are right now. We only have to go another 4 or 5% to get into that 6,800 range. And then a full 10% would be back to back 20% years. It would be quite incredible if we could pull it off. But I think the earnings growth will be undisputed in Q3. And then it's just up to the macro to participate. IBKR is now in the S&P 500. Robinhood is not in the S&P 500. So yesterday we had a surprise rebalance by the S&P 500. Walgreens got taken out. IBKR got put in. I don't have a problem with this because IBKR is a phenomenal company. I'm sure a lot of you guys even use their brokerage. You can put in the chat if you use their product. They're a great company. They deserve it. The founder of IBKR's net worth is 73 billion. You know, he's reaching cent-to-billion status, and a lot of people don't know about him. Thomas Petterfy. He owns like 70% of the company, and he's 81 years old. So I mean, look, this company has been around for a long time. They deserve to be in the S&P 500. My only fear is, does this mean that the committee says in September, we don't need to do a rebalance? Because they already got two financials, Block and IBKR. And I'm more upset that Robinhood got snubbed for Block versus IBKR. And then they pull a June moment where back in June, Tanner and I were live and we thought there was going to be someone getting into the S&P, and the S&P was like, we're not going to do any rebalance. That's my only fear going into September. I think there's like a good 3 to 4 companies. There's honestly about 10 to 15 companies that don't deserve to be in the S&P 500 anymore, just based on their stocks being down more than 60%. But, you know, we're going to see what the committee ends up saying. So if we don't get in this year, hopefully it'll be next year. They might make us wait for it, but eventually we will get it in. And I don't think Robinhood needs to get into the S&P 500 to have a good end of the year, but it would be nice if this could end up happening. Oh yeah, Coinbase as well got in a couple months ago. So they let in a lot of financials. Not hoodie yet. So hopefully next year we get a shot to see that play out. Okay, so that's what we got in terms of some of the headlines from there. Tesla right here, 345. That's down a little bit. Palantir did fall to 149 yesterday. V-shaped back to 155. So Palantir has been continuing its momentum, staying afloat and not getting hit as badly as some of the other AI names. Now, obviously, it took a hit from 190 to 150, but the bleeding theoretically has been kind of chilling out at 150, which means it's basically at where it was before earnings, which I can't get that mad about. I think those earnings were incredible, but I understand if the street wants to bring it down to a multiple where it was right before earnings. Now, someone in the chat asked, do you think the government could take a stake in Palantir? Which is kind of crazy to even think of pontificating around that question. But then I see this clip from Lutnick today, where he suggests that the government might be thinking of not only taking a stake in Intel, which they've officially done, a 10% stake, but also in Lockheed Martin.
What about defense companies, though, Secretary? Why shouldn't the U.S. government say, you know what, we use Palantir services, we would like a piece of Palantir. We use Boeing services, we would like a piece of Boeing. There are a lot of businesses that do business with the U.S. government that benefit by doing business with the U.S. government. I guess the question is, where's the line?
Oh, there's a monstrous discussion about defense. I mean, Lockheed Martin makes 97% of their revenue from the U.S. government. They are basically an arm of the U.S. government. They make exquisite munitions. I mean, amazing things that can knock a missile out of the air when it's coming towards you. But what's the economics of that? I'm going to leave that to my Secretary of Defense and the Deputy Secretary of Defense. These guys are on it and they're thinking about it. But I tell you what, there's a lot of talking that needs to be had about how do we finance our munitions acquisitions. I think a lot of that is talking. And now you have the right people in the jobs and Donald Trump at the head thinking about what is the right way to do it. I tell you, the way it has been done has been a giveaway.
All right, folks. So what do we think? Are we becoming the CCP? Like, this is just like, bro. I mean, this is kind of what the Chinese Communist Party says. They're like, hey, you know, we do a lot of well-being and social progress for these companies to thrive in. Therefore, we deserve an equity stake in them. And I mean, I don't know. For Intel, I understand because, look, there is a legitimate argument that Intel has gotten so many grants from the U.S. government and national security is so intrinsically tied to manufacturing chips because that is like the oil of the 21st century that Intel cannot fail and the government needs to step in and save them. But when you talk about taking a stake in TSMC and Lockheed Martin, and I don't think they'll ever be able to do it for Palantir because they have Class F shares, so I don't think that'll necessarily easily happen. But it begs the question, like, what exactly is the Trump administration trying to do? I don't know, dude. I mean, Trump is supposed to be a capitalist. He's not supposed to have the government interfere this heavily. Now, he's kind of acting not as capitalist as I think people thought he was going to be. They've only done it in Intel so far. So if it's a one-time Intel thing, I can understand that. And quite frankly, that's not that big of a deal, just given all the reasons around national security. If they start taking strategic equity stakes, I mean, they already have a 15% Nvidia AMD deal, right, on chips. Like, if they start really taking stakes in companies through like the U.S. Sovereign Wealth Fund, I think it would be a bit weird. And I don't think a lot of companies would allow them to do that. Now, granted, they don't have any governance on Intel's board. So they have non-voting shares. I think they have $850 million worth of, or 850 million shares from Intel at like $20 a pop, but they don't have any voting shares. So, they can't influence the business in and of itself like that. But it is a new era in America for the way this is playing out. Does it actually affect the market? No, I don't think so. I don't think it sets a precedent for like companies to not be independent or anything that dramatic. I mean, like a couple of equity stakes in some of these companies that get a lot of funding from the government, I don't think does that. But it definitely makes people wonder exactly how is the administration thinking of some of these companies and, what does it mean for them to actually have equity stakes in these companies as well. So I do agree. Intel got a lot. And the other thing that annoys me about Intel getting a lot of money through the CHIP Act is they fired a lot of people, bro. They fired 40,000 people over the past 3 years. So it's like they got a ton of free money through the CHIP Act and they didn't really keep their employees. In fact, they cut their dividend, right? Like, so I get it that Trump's pissed off about how they've operated and AMD and Nvidia have just like destroyed them in terms of manufacturing chips. Question is if this process of equity stakes gets taken to other companies. And we're going to find out over the long term if that's what the Trump administration does. All right, folks, we got 3 minutes until the market opens. Again, Tom Lee will be live on the show at around 10:30. It will be his first market open debut. So very excited to have him on the show today. I think you guys saw some of the, wishes I got on Twitter on Friday. Or not Friday, on Sunday. It was it was because Tom Lee wished me a happy birthday. It's not my birthday. My birthday's in October. And he saw a video of people singing happy birthday to me at the Miami meetup because people wanted to bring the meme to real life, the meme that is wishing Amit happy birthday in this chat, which I don't even know how this meme started, but it started somehow. And what am I supposed to do? I'm supposed to correct the GOAT? No, I went along with it. I said, thanks, man. I appreciate it. I was literally sitting with Derek on the couch, and Derek posted the video of people singing happy birthday to me. And I was like, Derek, he's like, what? I was like, bro, your video, like Tom Lee just wished me happy birthday in front of all of his followers. And he's like, dude, now today's your birthday. I was like, I guess today's my birthday, bro. There was no way in hell I was going to comment underneath this and be like, sorry, Tom, you're wrong. It's not my birthday. It's like, nope, he's right. It's my birthday. So there you go. Maybe in October when it's my actual birthday, we'll tell him the truth. But as of now, it's going to be so funny if he brings up it's your birthday today. He says, by the way, happy belated. I'm be like, yeah, thanks, Tom. Appreciate it. It's a great time. It's a great birthday. So there you go. All right. Red or green today. 65% of you say green. 65% of you say green. Yes, October is not my birthday anymore. October is not my birthday anymore because of what Tom Lee says. I did buy some BM&R yesterday. I mean, look, I'm getting more bullish on ETH. I think Steve and I will do a show on it, either dedicated to ETH or Steve will be on the show hopefully tomorrow on the morning open or maybe on the market close. But Steve's getting a lot more bullish on ETH, and we were having a conversation about it. And look, it makes sense. I mean, at the end of the day, there's a use case to Ethereum. The use case to Ethereum is expanding. It's not that complicated. And the ETH treasuries have raised, at this point, tens of billions. At one day, it'll be hundreds of billions of dollars to buy Ethereum. And so whenever ETH gets sold off, BM&R gets sold off, if you believe in a long-term vision of Ethereum, these guys are going to buy it up. Those stocks are going to be leveraged against it, even with the dilution. And as a result, they will gain momentum. So to me, I don't think the thesis is that crazy, but we'll talk about it with Tom Lee today. And we'll go deeper into his thoughts on Ethereum, the market, V-shaped recovery, all that good stuff when he's on the show. All right, folks. Thank you, everybody, for being here. Deeply appreciate everyone coming every single day onto the show. We are back. It is Tuesday, August 26, 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Ethereum, 44.87. That's up about 1.87% on the day. Palantir, down 1.4%. So Palantir gets a red candle, similar to what it had yesterday. Yesterday was a little bit more violent as soon as the market opened. But right now, it is down 1.45. S&P is flat on the day. It was down about 0.35 yesterday. Snapchat just over $7. Zillow's actually up a little bit. Apple, that's down 0.36%. Where is Opendoor? That is green by 2%. So you got Opendoor up. It was up 20% yesterday. Then it fell. Now it's up 2%. So maybe 460 is a bit of a base, or at least 450. 350 was the base a couple weeks ago. So maybe that is making some momentum to the upside. AMD right here, that's up 3.3%. AMD and IBM had a collaboration today. We'll talk more about that in a bit, but AMD and IBM did have some news, and that's why AMD is getting some love right there. That's up 3.65%. SoFi, wow, 2650. 2650. Let me check $27 resistance. I bought my shares yesterday at $26.01 in the overnight markets. SoFi right here, 27. 46,000 shares. 46,000 shares. Not that crazy to see SoFi get to 27 based on those 46,000 shares. Nvidia, 181. That's up 0.5%. Robinhood, that's down 0.5%. AMD, that's up 3.2. Reddit, that's basically flat. Honest, that's flat. Dell, that's up 0.48. UNH, 306. That one getting a bid a little bit today. Again, it's not really breaking out ever since Buffett disclosed that he bought it, but UNH at least above 300, which is up from the 237 level that it got to. Tesla at 348. That is also green. Now, Rocket Lab's been having a fun couple of days. There's been a variety of catalysts that I think the street is thinking about more deeply, along with the fact that Rocket Lab invited some retail shareholders, including Matt and Vince and those guys from the Rocket Lab Weekly podcast, to see their Neutron launchpad in Virginia, which is super cool, dude. It's just amazing that they're embracing that community. So Rocket Lab right here up 1.9%. That one trying to get back to $50. It hasn't seen 50 in about almost 3.5 weeks. It topped out around 53 about a month ago. So getting back above 50 would not be bad for Rocket Lab. CrowdStrike right here, that's up about 0.5%. HIMS, what's going on with HIMS? Is that green? Intel, by the way, down about 0.5%. HIMS is also green. That's up 2%. That's down from 50. That one's still holding up. IBKR not getting any S&P 500 pump. Not getting any S&P 500 pump. Grabby grab. Are we down? We are down. No news on grab today. Could just be people selling it off for whatever reason. One thing I will say about grab, there has not been an insider sell in over 4 months. So again, I know I keep bringing that up, but this is a stock where I've seen historically insiders sell almost every month, and we have not seen an insider sell in 4 months. Maybe the insiders know that, this is just not the right time to sell the stock because they're going to make a move soon. I think the street obviously is still worried about what they're going to do with their cash pile. Hopefully we'll get some answers to that soon. But grab right here does not have the volatility of some of these other names. And that one has been relatively flat. Nvidia right here, 180.25. That's up 0.25%. Palantir, 155. That one's starting to recover. S&P goes green, which is nice to see. And that one is up. Palantir had some insider sales. Yeah, so Palantir did have some insider sales over the past week. I think it was to the tune of like 500, 600 million bucks. Even with those insider sales, stock has been able to hold 156. I know it's down from 190, but the insiders sold at around 151, 152. So it's not like Karp and Sham sold at like 187. They sold around 151, 152, 150, and we fell all the way to 142. So digesting those insider sales, the market was able to hold up, which I think is rather bullish, even though Palantir has been on a downtrend. And I think normalizing the 150s would not be the worst thing in the world. Robinhood right here at 107, just trying to break above 107.3. Reddit 219, that's green. Neo, that's up 7%. Neo's been having a hell of a ride over the past couple of weeks as well. Yeah, and those were scheduled sales because, they do have to pay a lot of taxes. So it's not like they just sold them out on the open market because they were bored. It's like tax season is coming up, or at least they're getting their shares ready, the capital ready to be able to afford those taxes. And those are 10b5-1 scheduled plans. So it's not like they chose at this moment to sell those shares at 150. If the stock was at 130, they would have sold those shares as well. Bitmine, that's up 1.27%. So that one's getting a little bit of love. Oklo. Okay, so Oklo got upgraded by Bank of America to $92. This is what I mean when everyone's like, oh, CapEx is slowing down. It's like Oklo is one of the only companies. There's one of like 5 companies that are really innovating in the nuclear space that are actually getting deals with the Department of Energy. Bank of America said basically in the report today, guys, the energy demand is going to be bigger than anything we can imagine. And as a result, you need to be allocated, this was a note to their institutional clients, to energy infrastructure plays. And one of those is Oklo. Now, look, Oklo doesn't have revenue. They don't have a product. They're in the beta stages of building out what they're building out. But if the demand is that large, you're going to have people front run that. And I think that's why Oklo has been getting some of the momentum that it's getting. Yeah, LEU, Centrus Energy. This one as well is also been maintaining some momentum right here. That one's up 6%, probably based on that idea from Bank of America that Oklo deserves a bid. Opendoor getting a little bit of a bid as well. There you go, 470 or 464. That's up 2%. Tried to break 470. Again, 52-week high was 587. That one is up 2.85%. SoFi trying to get back above 2650. It hit 2661. Could not get back above there. UUU, that's up 15%. Energy Fuels. I've never heard of this company, actually. UUUU. That's up 15%. Market cap, $2.8 billion. I would imagine this has to do, if their name is Energy Fuels, with the energy sector. And energy is catching a bid. And so that makes sense. VRT, VST, those are some data center plays as well. They've had a great year as well. And they continue to catch a bid. They're a miner in uranium miner in Texas. Sounded like one of those ETFs for uranium, but I think that's a different ticker. This one seems like an independent company. Energy Fuels, UUUU, up 15% on the day. So that Oklo, Centrus Energy, all of these guys up 5 to 10% as energy continues to get bid. What about XLE? That is the energy ETF. That's slightly down. So the thing about XLE is they have Chevron and Exxon and all these types of legacy oil and gas companies. The modern companies like a Oklo that don't do anywhere near the revenue of an Exxon are actually having a way better year than Exxon because the potential of growth that is being baked into the assumptions either is going to be dead wrong or it's going to be very right. And if that's the case, Oklo was $6 back in September of 2024. It's done very well based on the assumption that energy is going to keep growing. So that's what we have on Oklo. IBKR goes red. Wow. Maybe it's good Robinhood did against the S&P 500. Maybe the macro right now is not ready to hold an S&P 500 pump. I mean, just because you pump on the S&P 500 doesn't mean that pump is going to sustain itself. But with a high-profile name like a Robinhood, I would imagine people would be very excited for it. But IBK are not getting any love, even though they are now in the S&P 500. Microsoft right here, 504. Microsoft, dude, $4 away from going below 500. That is erasing a lot of the momentum over the past couple of months. This stock right here, year to date, is up 20%, which is still amazing. But it was at 550 3 weeks ago. So that one has taken a bit of a hit. Why is CEG not catching a bid? Well, remember, CEG is up 30% year to date. So I don't know today why it's not catching a bid necessarily, but it has still had a pretty good year for, an energy company. And this one has maintained some of its momentum. 312 right here on CEG. Rocket Lab 4778. SoFi kind of losing a little bit of the steam. Tesla 345. That one goes red. Nebia 70.2. CoreWeave, that's down. Lockheed Martin, that's up 1%. Accelera, that's up 1.3. Opendoor 475. That's up now 5%. Again, volatility. If you're trading something like an Opendoor, you definitely have the volatility and the liquidity necessary to make those trades, either long or short. But you are seeing that on Opendoor. And then Ethereum trying to crack to 4,500. Trying to crack to 4,500. Victor says, I sold off Microsoft yesterday. The stock is just like Amazon. I don't have the nerves to wait ages for it to do anything and can't even hold it when it moves up. I mean, look, I get it. There are some stocks that are just dead money. And Microsoft has not been dead money this year by any sense. But if you're expecting a really, really massive move when you see some of these other movers, then I get not wanting to hold it. I will say, though, Microsoft's an amazing company. Amazon's an amazing company. So the question is, what else could you get levered into that's better than a Microsoft or Amazon that will move and you'll be correct about the move? So there have been plenty of retail stocks this year, like a Hood, a Rocket Lab, a Lemonade, that have done really well and have had monster moves outperforming the Max 7, but they're also not as safe as the Max 7. So whatever name you kind of allocate to, you just got to see what is your barometer for risk tolerance in regards to how safe it can be. Rocket, this one again has been having a good couple weeks as well. I will say from a rate cut perspective, I would buy Rocket over Zillow and Opendoor. I mean, I think the rate cuts actually are very beneficial to Rocket. Quite frankly, I'd buy SoFi over I even think of touching Opendoor if my whole thesis is rate cuts. Obviously, Opendoor is more volatile, but when it comes to owning a really good business and not stressing that much about the business itself, yeah, I think Rocket or SoFi are not the craziest options if you're getting a rate cut proxy. Here's the thing. When we get the rate cut, is it priced in? So everyone's saying, well, the rate cut is going to be good for Opendoor. It's like, okay, well, the stock was at $2.30. Now it's at almost $5. I mean, the Powell pivot really got the market excited about it. Once we finally get the rate cut, is that baked in? Does that meaningfully change their business? Now, for SoFi, it will, because SoFi, that you're going to get more refinancing demand. With Opendoor, unless they change the fundamental structure of the business, which a lot of people have acknowledged is broken, the rate cuts aren't going to do shit. The rate cuts are just, okay, maybe it's a little bit easier to buy and sell homes, but their margins still aren't getting better. They have to have an overhaul of the business. And that is what I'm looking forward to seeing the new CEO end up doing. But, so far we haven't seen that happen yet. ONDS is flying. This is a drone platform company. So again, the drone stocks are getting a bid as well. That's up 5.9%. Pete Hegseth 3 weeks ago said that the drone companies were going to do well. He didn't say they were going to do well, but you could imply that he said they're going to do well, given the Pentagon's going to be buying up a lot of their drones. So these stocks as well are finding a way to get a bid of a bid. Palantir right here. That one now is going green officially. Grab still at $4.99. Palantir 5 cents away from going green. NEO, again, been a great day. Been a great couple weeks for this thing. It was stuck at $3. Now it's at $6.72. That's up 10.34% on the day. NEO also getting some love. Nvidia 180 breaking down from 181. I think the street's going to be expecting a good earnings from them. So that one's probably going to be flat until we get it. AMD, again, that partnership with IBM this morning that I saw, it seems bullish. And as a result, that one is likely catching a bid. So the quote is, AMD and IBM are partnering to build hybrid quantum-centric supercomputing, fusing quantum and AI with the best of high-performance hardware and software to solve the world's toughest real-world challenges at scale. I don't know if that specifically is good for the quantum stocks. QBTS, that one's up 1.4. Rigetti, that is also up. Okay, so the quantum name's getting a bid. based on AMD and IBM announcing a quantum partnership. So there you go. That makes sense. Yeah, Tom Lee will be on at 10:30, guys. He'll be on at 10:30, and we will hear from what he has to say. Amit, do you think there will be a rotation to Chinese stocks since they may have been lagging a lot? You know, every time I feel like there's going to be some type of rotation, I remember that the companies that are putting up earnings are not the small caps, are not Chinese companies or international companies outside of a few international like Nubank that has been having a good run, dude. I think it's back above 14 right here. Yeah, 14. It's large cap American tech companies. And this is kind of a point Tom Lee was making on a podcast over the weekend as well. It's like, look, these are the companies that are getting their multiple, which is why, like, these are the companies that are putting up the earnings growth, which is why they're getting a multiple and why they're maintaining the multiple for the broader S&P 500. So like the concentration risk that people are afraid about and requiring some broadening out. Yes, it's healthy to have a broaden out, but does that mean you go to Alibaba or do you stay with Nvidia? And obviously that's up to everyone's own preference, but I personally think a lot more people stay with Nvidia. Although we saw that report last week that Nvidia is the most under-owned Mag 7 inside of the 13Fs that have been disclosed, which is astonishing to me. I actually like that because that means there's a wall of worry that Nvidia has something to prove, and hopefully there's some new money that's going to come in. Nvidia now going red on the day. But on Wednesday, we will get a better understanding of how this plays out. This was the Uber CEO over the weekend doing an interview talking about Tesla and some of the challenges they may have when it comes to self-driving.
What do you think wins? Waymo's tech or Tesla's? Cameras, LiDAR, radar?
I personally believe that autonomous vehicles have to have superhuman levels of safety. I don't think it's good enough for them to be better than humans. They have to be multiple times better than humans, and Waymo's certainly proven that that's possible. So why not take that shot? I think in the near term it's going to be very difficult, and Elon would tell me I'm wrong, and never bet against him. But it's my instinct that in the near term, it's going to be very difficult to build a camera-only product that has superhuman levels of safety. And again, now, at some point, will it be possible? Quite possibly, yes. But if you can have instrumentation that includes cameras and LiDAR, and the cost of LiDAR, you know, solid state LiDAR now is $400, $500. Why not include LiDAR as well in order to achieve superhuman safety? So
Elon responded to that, and he basically was like, LiDAR sucks and neural nets are going to win. He said it in a friendlier way, but essentially he said, look, we've done all the testing, we've done all the experimenting. LiDAR is not the way to go around FSD and self-driving. So, I mean, we're going to find out. We got 10 years of this entire thesis playing out. Nvidia is going to be using synthetic data to create, with their Cosmos platform, different models for self-driving that they're going to be licensing out to GM and Ford, and they have all these partnerships with them as well. So I mean, like, this is going to be a long story to see how it ends up playing out. Tesla right here at 347 is nice to see Tesla breaking above 330. But Elon's either going to win and take the entire market, or he's going to win but not really get that much market share. And I don't know exactly how that's going to affect the broader unit economics for self-driving going into the future. I do think Tesla really does have the capacity to scale at a meaningful pace. But again, Elon did say don't expect for the next 5-6 quarters anything special. I mean, quite literally, he said on the earnings call, until Q3 2026, you're not going to see positive earnings growth. And that's okay. I think that's accumulation time, but it will be a story of if they can actually end up figuring that out. Opendoor catching a bid again. All right, there she goes. 494. That's up 8%. The volatility is high. Volume today on Opendoor. Let's check the volume. So it's up 10% in about 15 minutes. Volume is 75 million shares. That's incredible, dude. I mean, it's on pace for another 800 million share volume day. So definitely have people coming in and buying it. The question is, can it actually hold some of these gains that it ends up getting? AppLovin right here, 451. That goes green. Circle, that's at 125. Pinterest, that's at 3562. MicroStrategy has been kind of in the gutter over the past few weeks. Bitcoin, what's happening with it? Does anyone know what's happening with Bitcoin? Like, why are these OG wallets from freaking 2020 or 2010 and 2011 selling off their Bitcoin. It's becoming a bit aggressive. And I don't necessarily know why, but over the weekend, there were these wallets that sold off a lot of their Bitcoin. Yeah, this one here is what I saw. 2 OG whales sold off about 90,000 Bitcoin. And I don't know. Are they buying Ethereum? Yeah. Are they moving to ETH? Like, I'm thinking of selling my Misty for BMNR. Like, because Misty's only fun if MicroStrategy is doing its thing. MicroStrategy is not doing its thing and Sailor keeps diluting. Misty doesn't work anymore. It's not that exciting. So I am more in line with the fact of like seeing where Ethereum's use case is and getting excited about that versus like being that deep into Bitcoin. Now, granted, Bitcoin will do well long term. Obviously, like Bitcoin is, all the bull cases of Bitcoin last, but in the short term, in terms of the volatility and where the capital is going, it might be Ethereum. By the way, even though Ethereum sold off yesterday, net inflows August 25th, 443 million on the ETF. So even with the sell-off, the ETFs were buying, and I think they're just going to swallow it up more and more and more as it gets cheaper because they all know where the story is going. And it seems like the story is going higher because there's a real use case to it. So we're going to see how this ends up playing out. Rotation out of Bitcoin, out of retail hands into Wall Street. Yeah, that could also be happening as well. 500 days after halving. This is what Derek was saying. Derek was saying it's about to be 500 days after halving, and that's when Bitcoin tends to tank. I mean, we're going to see if the institutional investors maybe don't allow that to happen as easily as it's happened in the past. IBKR down about 1%. Centris up 7%. Oklo, that's up 5%. Grab, that's at $4.99. One thing on Grab, I will say, selling puts on this, even at $5 at $4.50, is not that scary to me. I really do think it's de-risked around that $4.50 range. At $5, it's kind of been flat and stuck there. So if you're selling puts at $5 and trying to take some of the premium, and you're okay with getting assigned at $5, like some of these shares you might not be okay with getting assigned at. Like maybe you don't want to get assigned SoFi at $25 because it's only been above 25 for a couple of days and you're not really comfortable with it above 25. With Grab, it's kind of been stuck at 5 for the past 3 months. And if it stays stuck at 5, then those put premiums, even if you get assigned, won't be the worst thing in the world. Tesla right there, 347, UNH 306, Nebula 7120, App Lovin 455, and then Opendoor 481. That is green. Breaking. Tom Lee looking forward to speaking with you today. Yeah, Tom Lee just tweeted he's looking forward to our conversation today. Dude, Tom is just like, he's just such an awesome guy, bro. He's just such an awesome guy, and I'm happy he's embracing independent media as well, and instead of just CNBC, he's doing different things like my show. So it's super cool, dude. It's super cool. I think it'll be fun. You guys love him. It's been a part of we've been watching his clips for like 3 years now. So it's super cool to see him actually come onto the show and talk to everybody as well. So 10:30, in about 40 minutes, he'll be live. And we'll see what he says when he's on. Okay, so in terms of some of these other headlines, let's get to other stuff because there were a few more headlines this morning that I think were important to kind of get into. First of all, Truist upgraded AMD to 213 from 173. So you got an upgrade right there. AMD and IBM, we talked about that partnership, and that was around quantum computing. Spotify is rolling out direct messaging. So now you'll be able to DM people on Spotify about music and audio. And it's kind of like a Instagram almost UI for DMs, which I think is interesting because, dude, am I the only one who's like Spotify dating should be a thing? Like music collaboration on your Spotify is like music tastes are some of the easiest ways to tell if people are compatible with each other, right? If they like the same music. I mean, I don't know. Maybe there's a vertical where Spotify's like, hey, we're going to actually make this really social. So we're going to see how that ends up playing out. But that, I think, could be kind of cool for Spotify. That stock got hit after earnings a while ago. Spotify 682, that's still down about 1.72% on the day. Tesla is now in the Goldman Sachs hedge fund VIP list again for the first time since 2022. So Goldman Sachs puts out this VIP list of the names that they think are the best names in the market. It's about 40 names. And Tesla made the list for the first time in 3 years. So you have AMD out there, you have Mercado Libre, you have Nvidia, Meta, Microsoft, Amazon, Capital One, Reddit, Oracle. They don't have Palantir, they don't have Robinhood, but they do have Tesla. So you got Goldman Sachs that is starting to feel a bit more bullish, and they think that this one will end up doing well long term. Any platform with social ends up turning into a messaging gap. Yeah, I agree. Even Vlad, he was asked about that on the Iced Coffee Hour, which was a good podcast that he just did, which is would Robinhood ever do a social media platform? And he said you'll have to wait and see. Now, look, I'm not the biggest fan of Robinhood trying to build a stock social media platform. I don't know, dude. I just don't like Robinhood being associated with like social media. I kind of like the experience without all the random people sending messages back and forth, because that can turn into chaos really quick. And you get into content moderation and all this stuff. And I just don't think Robinhood should be associated with that. So I'm not the biggest fan of that idea. But he did say that these apps end up turning into messaging platforms first and foremost. And then, if people can message each other, that ends up turning into, usually dating. So who knows? Maybe that's a vertical that Spotify is going to try to get into. Lutnick just posted a video officially from his Twitter account about Intel. Let's see what he posted right here.
I'm sitting with Lip-Bu in my office, and at 3 o'clock, we're going to sign a document together in the Oval Office where the United States of America will own 9.9% of the great American technology company Intel. I can't be more excited for America and for Intel that we get to work together.
First of all, thank you so much, Secretary. And this is a big, important historical agreement that we can work together. And then more important, I don't need the grant, but I really look forward to have the U.S. government be my shareholder, and we can work together, make Intel great again.
So what happened is Lip-Bu became the CEO of Intel, and he came to see me, and he said, the Biden administration gave this company a grant of $10 billion, and we don't need a grant. We're a great company. Maybe not with the best leadership, but now it has good leadership.
Thank you.
So he said, and that was the conversation. And then when we had the conversation with the president, he said, look, we don't want to take your money away from you, but shouldn't it be fair? And we agreed that it would be fair that the same money that you give a company, America should have shares for it, because it's just fair. And we agreed together. And then you went to your board of directors.
Yes.
And they agreed.
Yes.
It's a giant public company, so it had to be fair.
Yes.
Had to be fair.
Had to be fair.
There's no other way. And so we did it fair for Intel and for the American people. And I think this is exactly what Donald Trump is all about. I'm really excited that today we get to do the deal.
That's right.
together.
Thank you so much for your support.
Well, I mean, there you go. There you go. This has been one hell of a presidency so far. Rocket Lab, oh boy, she's trying to go for 50, 49, 49. She hasn't seen 50 since, let's see, last time Rocket Lab was 50 was July 18th. It's been over a month, July 18th. So getting above 50 would be fun. Would be very, very, very nice to see. SoFi right there, still 26.25. Nvidia just below 180. All the quantum names getting a bid, and then Palantir goes green, 157. That is green on the day. Okay, so we're going to see kind of how the market ends up potentially either doing a rotation here or staying the way it is. This is the heat map of what we have today. It's kind of red across the board, except a couple of names being green. So, oh, by the way, Google, can we talk about that? Google yesterday, all-time highs, and Apple and Google, with that was breaking news on Friday, potentially partnering to bring Gemini as the operating system or the back-end infrastructure for Siri, theoretically. I mean, that's a big deal if that ends up playing out. So from Bloomberg on Friday, Apple has reportedly explored licensing Google's Gemini AI engine to power a revamped Siri. Google has begun training models specifically for Apple servers. I feel like that's very, bullish Google. Google's actually a little down on the day. Microsoft's green, Nvidia slightly green, Eli Lilly's green. Everything else is red. Industrials are green, entertainment slightly green, real estate's red, utilities red, tech is red, insurance is red, credit's red, financials are red. Tech is slightly going green, IBM, Cisco, Arista, but very, very slight green. So, you are seeing some green in tech and a lot of red in other places, but that red is also very slight red as well. It does feel like Google should be able to catch a bid, and fair value for this guy is probably around 230, and that Apple partnership could help them. Now, here's the thing: if they lose the browser in Safari, that would be bad for Google, but that's also already priced in. I think the street knows that's going to happen. Maybe you get down another 3-4% when the news drops, but if they become the operating system for Siri, even if they lose the browser, I feel like that would be bullish. So it doesn't feel like there should be that much pain if they're able to kind of go the opposite direction. If they lose the browser and still be able to get Siri, which should be good. We get consumer confidence in 2 minutes. Okay, I didn't know we had that coming out today, but I will pull that up. So at 10 a.m., we will get the consumer confidence index. That will be an important one. We'll see how the market reacts to it. Axios is reporting Trump Jr. has invested double-digit millions in Polymarket. Okay. That is, I guess, another investment by the Trump kids who've been making a lot of investments. By the way, we know that Trump owns a lot of Ethereum, right? We can't forget that. Whether it's DJT or his sons with their crypto holding company that they came up with a year and a half ago, they own a ton of Ethereum. I think it's over $500 million of it. So, I mean, there are some pretty strong incentives across the board to get Ethereum to maintain momentum. And you got the president who's long Ethereum as well. Grab right here at $5. Google at 206. SoFi 2630. S&P slightly green on the day at 642. And Polymarket runs on Ethereum. That is correct. So I don't know. It just feels like every single catalyst, bro, it comes back to Ethereum. Like the catalyst for Bitcoin is it's Bitcoin, right? There's a 21 million. There's finite supply. The whole sovereign governments are going to be buying Bitcoin. I mean, maybe, but we haven't seen a strategic Bitcoin reserve or anything like that. For Ethereum, it has nothing to do with its supply. It has everything to do with its utility. And I kind of like that argument way more than supply. Supply is an argument around, hey, the sort of fundamental dynamics of the asset classes that, there's less available Bitcoin for people to buy. With Ethereum, it's almost like a business. It's like, hey, if they keep growing this use case, if AMD keeps growing its data center business, their stock should appreciate because they should have better earnings. Kind of similar on Ethereum. And that's a very easy thing for a lot of people to understand. Definitely for the institutions to get on board with. And so that might be helping create a lot more momentum. So you just got to see how that ends up playing out. All right, confidence, we should be getting that pretty soon. Let's see if that comes out in the next 10 seconds. Yep, we got it. 97.4 versus 96.2. 97.4 versus 96.2 on consumer confidence. S&P 500, not a big beat, but you do have that green candle right there. Enough of a beat, I guess, for the market to be a little excited, but nothing too crazy. Consumers continue, and this makes sense. We saw consumer retail sales last week. We saw consumer expenditures 2 weeks ago. Consumers are spending. And even though you had certain companies come out here and there saying, hey, the consumer's a little weak, I mean, it is not a broad-based trend like it was in 2022, where every company said the consumer is struggling. You had some one-offs of companies saying the consumer's interested. I mean, even Home Depot, Walmart, and Lowe's didn't blame the consumer. And those earnings, you would think they would be market-moving events. They reported earnings. Target was down 10% because of a CEO change. Walmart was up 1%, and the market moved on. It's the market didn't even care about those companies, even though those companies are theoretically some of the most important companies because of the whole tariff debacle. But no, the market didn't care. The market cares about tech earnings. And as a result, it doesn't seem like the retailers had that much of an impact. But also it seems like consumers are in a good spot, which is why retailers are not having that much of an impact as well.
This is August read on consumer confidence from the conference board. 97.4 is the headline, better than expected. However, not sequentially higher than the big revision. Last month, 97.2 now becomes 98.7. And if we look at the present situation, 131.2, that follows 132.8. And finally, expectations, 74.8. And it is following an upward revised 76.0. So not one is sequentially higher than our final July reads. Now on Richmond Fed, on the manufacturing side, -7. That's a little better. We're expecting -11. What's interesting here is that is the best read since it was -6 in March of this year. Comping to a negative number, never good. But if we go to the business side, the service side, a little bit better, a positive number, up 6. That follows -8. Up 6 would be the best. Well, just since June, we're positive 14. If we look at the market, right now we're at 369 in a 2-year. That's where the market was before the 830 data, and before this data, it hasn't really moved much. It's down.
So again, kind of a nothing burger, but overall consumers in a decent spot. Folks, Rocket Lab back above 50 for the first time since July 18th. Look at that. 50-50, up 7% on the day. I mean, I will check 51 resistance. Why not? Let's see. Maybe we can get some real momentum here. 51 has 38,000 shares. 38,000 shares for Rocket Lab. That's up 7%. Nubank as well, 1424. That is green. Opendoor back above $5. That's up 12%, 12.7. That is green. IBKR still down on the day. Vertiv, that's up 1.74. SoFi not really breaking out above 2650. That one's kind of been stuck right here. SoFi now a $31 billion market cap, growing 44%. One could argue they're going to continue to at least grow at 30% over the next few quarters. And so I don't know. I don't know if it's able to really pull off that move, but I did buy some SoFi last night. And so we're going to see. But you do have Rocket Lab really going for it. Wow, Rocket Lab 5080. She's going for it. She is going for it. Materials Corporation, that one also getting a bid with rare earth minerals. Trump did say yesterday that if China doesn't send us magnets, he's going to tariff them by 200%. He's just every day it's something else. But I guess rare earth minerals, again, the street's thinking we'll catch a bid eventually when we get this deal done with China. By the way, we did a deal with South Korea. I haven't looked that deep into it, but apparently in exchange for 15% tariffs, South Korea says they will set up a non-binding agreement with the U.S. to govern $350 billion in investment funds. The package will target strategic sectors like minerals, batteries, chips, AI, quantum computing, and shipbuilding. By the way, shipbuilding, Palantir has a major deal with one of the largest South Korean companies around shipbuilding. So theoretically, that could be very good for Palantir. And they said most of the funds will be structured as loans and guarantees, not equity, amid disputes over profit sharing. So you do have South Korea, similar to Japan, saying, hey, we're going to invest a couple $100 billion into the country, but it's not going to be you guys get all the equity. We want a stake in it. I don't know how the deal will be structured, but that is something that we got yesterday from the South Korean officials. Opendoor right here up 12.5%. Nvidia back above 180. Rigetti, that's up 5% on the day. Rocket Lab 50.70. Again, 51 has about 30,000 shares. It's not too crazy. And then Palantir going green, 157.65. That is green as well on the day. Yeah, they said it was non-binding because, dude, I don't know how any country can act. Even Europe said it's non-binding. That's $600 billion of private equity investments. Europe in their memo said we can't force European countries to invest in the United States. We're going to try to incentivize them, but we can't force them. So, and I think Trump knows that. So even if we get 100 out of that 600 billion, he would be happy. But I don't know if we're going to get 600 billion in private investments from European companies. So we're going to have to see over the coming years. Robinhood right here, 106.97. That's slightly flat. Dell 131. And then AMD on that IMD partnership or IMBM partnership. That one's up about 2%. Apple has told insider talks about trying to buy Perplexity as per Axios. Okay, I think we knew this for a while. Oh, about buying Mistral. That's the new one. Perplexity, we definitely knew. Mistral is a French AI lab, if I'm not wrong. Yes, it's a French artificial intelligence startup. I think AMD invested in these guys as well. Yeah, I think AMD has a slight investment in these guys. Okay, so Mistral's valuation right now is $7 billion. So if Apple were to buy them, they would be buying the talent from these French artificial intelligence researchers. Yeah, I guess that's like they got to do something, right? They got to do something. So I don't know. Hopefully they buy them. I mean, like the thing about Apple that's like confusing is just we just don't know their plan outside of revamping Siri. Now, I didn't think they deserved to be at 198, but you know, for them to get from 225 to 250, there's definitely gonna have to be a change in momentum in regards to AI. Let me pull up the stock draft scoreboard and see what we're doing. Matt should be on fire today because of Rocket Lab. Yeah, Matt's up 28%, Tanner's up 7, I'm up 12, Steve's down 3, Chris is down 1. Matt is basically just running away with it at this point. Like, I've got to do some serious catching up, or he's got to do some serious falling off for us to break even. But he is up more than double the second place, which is me. And then Trade Desk kind of hit Tanner last week, so that's why he's at 7. Steve's at -2, and then Chris is at -1. So well, that's what we got on the stock draft. Duolingo, what's going on with that one, bro? Jeremy, I think, is done with his put. I think he sold out of his put. So he made like 50% of the put and sold out. So it was a quick 50% for Jeremy. So there's all this drama about Jeremy being short, and then he made his money and got out. So I guess it doesn't matter anymore. But yeah, this one's been dead too. This one's been stuck. Same narrative has been kind of hurting them in regards to AI. Oscar, how was that today? Oscar right here, down about 1.4%. Lemonade. That one up 1.5, slightly green as well. Matt Murder is his new name. Yeah, that's his new name. Look at him in the chat being all nonchalant about it. Look at him. He's like, oh, you're talking about the stock draft? Interesting. I didn't know that. Dude, Matt was a celebrity at the Miami meetup. You had people coming up to him left and right, like, Matt Money. Like, I'm so happy he was there. Dude, if Steve was there as well, it would have been just crazy because everyone was asking for Steve. But Matt got out of the Uber to the venue, and people were like, Matt. And he was just like, whoa, what's happening here? So it was so cool, dude. It was so freaking cool to see that. And you know, that goes back to this whole point about the community, right? This entire channel is built on characters that are able to come on and contribute to it. And, you know, a lot of you guys resonate with that. So it's super, super cool. Hopefully he'll be at the next meetup, and hopefully we'll get Steve to come to the next meetup because I think that will be fun. Hopefully Tanner almost made it to Miami, but then he couldn't make it last minute. So it'll be fun to get all these guys out to a meetup. What is your cost basis on BMNR? 5130. I think I bought it yesterday. 5120, something like that. It's at 4982. All right, let me ask this question. Who is I won't even do a poll for this, but who's buying the dip, or quote unquote the dip? Forget the dip. Who's buying BMNR? It's down like 5% from last week, but who's buying BMNR? Because I don't know, bro. Like, the more and more I think about it, the more it's just like, if Ethereum runs, it is just obvious that yes, Robinhood will run, which I'm heavily inside of as well. But I'm also like, so is BMNR. And it's like, if it doesn't run and it's flat, the covered call premiums are great. And I haven't wrote any covered calls on it yet because, you know, I think Ethereum might break out. I mean, Ethereum was at almost 5,000 on Sunday. It was $50 away. That's not bearish, even if the Sunday algos want to take it back down to 4,400. So I kind of just think all these ETH treasuries, SBET, they bought some more Ethereum this morning. They have almost 800,000 Ethereum. Their NAV is now 1-to-1. I think Tom Lee's NAV on BMNR is like 1.4, 1.5. I mean, you're just seeing a lot more momentum in these asset classes. And I feel like it's hard to ignore it. Wow, a lot of people, dude. A lot of people. I also don't think it's euphoria, bro, because this is another question I was asking myself yesterday. I was like, am I buying it just because of euphoria? Am I buying it just because I'm like FOMO? And I'm like, no, dude, I think Ethereum's really going to work. So it's like Opendoor would be more euphoria for me because I don't know what the hell is, you know, what is the reason to buy Opendoor outside of just like being part of the meme. Ethereum, it's like, there's no meme associated with this. This is stablecoins and tokenization at scale over the next decade. Do we think that's going to grow or not grow? And I think it's going to grow, and it's already showing hyper growth in the early stages of the adoption of those two core use cases, which is stablecoins and tokenization. And if I believe in Robinhood's tokenization, which is built on Ethereum, and I think Robin is going to scale this not only in Europe, but in a lot of other parts of the world. Right now, it's mainly only Europe. Then I think Ethereum will benefit from that. And I don't know why I would be afraid to get exposure to that. And BMNR is just the way to get a little bit of leverage exposure. BMNR also will be able to stake their Ethereum, which will be another revenue stream for them. So, and I'll ask Tom. I know a lot of you guys are saying, ask Tom Lee why buy BMNR over Ethereum. So I'll be asking that as well. But, you know, I think that makes a lot of sense, and it's not that crazy to get into that entire asset class. Okay, guys, Tom Lee's at 10:45. Just got a message from his assistant. She said, "Hey, would it be possible to shift to 10:45? Tom's train got delayed." So I said, "Yes, no worries." So 10:45. So he'll be on in about 30 minutes, and we'll talk to him then. But I think it makes sense, dude. I think it makes sense. I think it makes sense. Tom Lee will be better at buying ETH at the right time and giving it greater utility than owning it yourself. Yeah, and the thing is, he'll be able to raise a lot more money to buy Ethereum, whether it goes up or down. And I think that's why getting Founders Fund and Peter Thiel and all these guys to back him, they basically gave him the okay. And they said, hey, like, we're on board with this. And so every time it gets sold off, if they just end up buying the dip. Rock Lab, by the way, losing 50. Now it's at 49.44. I just don't think that's too crazy. By the way, I did do an Ethereum deep dive on my channel on 3 weeks ago. So if you go, you just type in Ethereum deep dive emit, and it was about an hour and a half. And so that was like one of my first introductions to really understanding the thesis. I think it's a really good deep dive. It was with 2 experts in the industry, and I think it'll help people understand it as well. And so I don't know. I've been putting 2 and 2 together, and I think there's a thesis here. Also, you know, Steve said something on Friday that I thought was really interesting. What is the best risk reward in this market right now? Like if you're talking about like a 4 or 5x, right? Everyone's like, what's the next Palantir? What's the next Hood? What's the next 10x? I don't have the answer to that question. But is it crazy to say Ethereum is that next 3, 4, 5x over, call it, the next 3, 4 years? I know I'm being aggressive there, but like if Ethereum really starts to scale the use cases, it kind of feels like Ethereum is the one that could be that opportunity, because it's going to be hard for a stock to be that opportunity unless it's like a super, super undervalued gem that's going to massively grow. Like maybe it's Oklo, because there's just that much energy demand that it's going to go from not 6 to 76, but 6 to 500. But like if that doesn't happen, the move on Oklo, the 10x has already taken place. 6 to 70. HIMS was at $10. Now it's at 40. You had your 4x. Is HIMS going to go from 40 to 400 in the next couple of years? Like, I don't know, right? Feels like Ethereum, there's potentially an opportunity for that to happen, which would not be that crazy. I hope it's Grab, but I'm just expecting a double. I'm not expecting more than a double on Grab, but I don't know. Maybe it's Ethereum, maybe it's not, but we're gonna have to see. It's ironically, it's gonna be Opendoor. That's probably what's gonna happen. Opendoor right here, 520. That's up 15% on the day as well. Modi refused Trump's calls 4 times in recent weeks, as per a German newspaper. Dude, again, I love India, but I think the Indian government is being a little not smart here. I mean, I think it's time to talk to the U.S. Really? He's not picking up his phone call, bro? It's not like he's really not picking up the phones. This is the president of the United States. You're not going to pick up the phone call? David Zervos, CNBC. Okay, so this guy is a Jefferies analyst. He is now in the running to become the next Fed chair. Let's see what he has to say about Trump firing Lisa Cook. Obviously, he might not want to be that critical of Trump because he wants to be the next Fed chair, but maybe he has a legit reason not to be critical. Let's see what he has to say.
What should she do?
Oh, that's a tricky question. I think it's a complicated time. It's unprecedented, as you guys have said. Although, as you were just discussing, we've seen 3 different cases, and in fact, you could add in the Jeffrey Lacker case in 2017 of Fed officials, presidents, and members of the board that have had allegations against them that led to their departure in a pretty unceremonious way. So it's not it's not that uncommon that we have some problems or some violations. The real question is it a violation? Did she violate? And does the president have the statutory ability to fire for cause? I think the Supreme Court will adjudicate that. And I presume the Justice Department will or the courts now will determine whether she actually did commit any sort of crime.
Very politically correct answer.
Right. How do you think that the carve out for the Fed that SCOTUS has already given us might be applicable here?
You know, it's a tricky one because it was a tough one to read, that sort of the Fed had this special privilege that really was hard to get to the bottom of in that reading when they allowed the FTC and the FCC and the CFPB heads to be fired. So I think that'll be interesting to watch. But I mean, there is a more general thing away from that, Carl, which is about just the sort of right of the president to fire for cause and testing that with the Federal Reserve. This is untested. So I do think that needs to be seen in the Supreme Court. Does the president have the right to do this? In the law, he does. The question is, who determines cause? What is cause? Is this cause, is this a high enough bar for cause? I guess is the real story.
David, to the broader question of Fed independence, and certainly what is the president's focus on at least exerting some level of control over the Fed, as somebody who's on the list of potential candidates to succeed Jerome Powell, I'm just curious as to how you think about it. If we wake up one day and David Zervos is Fed chair, are we going to sit here and say, oh, he's going to be Trump's puppet?
Well, I'm sure there will be people that say that. They say that about a lot of other people in the administration. And I certainly think you just have to, thicken up your skin when you get to this town, Washington, D.C., and do your job. And your job at the Federal Reserve is to focus on maximum employment, anchored long-run inflation expectations, and price stability. And also recognize, David, something that I think is not recognized often by most people in the markets and most people that comment on the Fed, which is that there is a natural level of non-independence in this institution. This institution is a political institution, and you're going to get political pressures from all sides, from Congress, from the White House, from your own colleagues. And right now, I would argue, David, that inside the Fed, a decision to keep Lisa Cook in the event that she does have potentially charges against her that are valid, if they were to find that could be a political decision to keep someone on that is moving against the administration. So there's pressures inside, there's pressures outside. Politics operates in many different dimensions and directions in this city. It's not just unilaterally, let's protect the Fed from the president. We've got to think about all the politics that come from the Senate, the House, and also the internal personal politics that are on the board today. And those are large vestiges of the past administration.
No doubt. But I do wonder, David, whether the president's public campaign to get rates lower and, things that have been unprecedented in terms of his public attacks on Jerome Powell and obviously this move against Governor Cook, does it impact broader markets, in your opinion, in terms of the perception of Fed independence going forward?
Well, I don't think it does. And I think you can see that. Inflation break-evens in the tips market haven't adjusted significantly. Curves are a little steeper, but they're steeper all over the world. We're seeing it in the UK. We're seeing it in Australia. We're seeing it in Germany. So I don't think there is a question about credibility that's coming in here. I think there are reasons why term premiums may be rising globally, but that could be observationally equivalent to a lot of things that people might throw out as questioning Fed independence. I think as for the administration talking about its views on rates, why shouldn't we have an administration that talks about its views on rates, so especially if they've got views that are helpful to the discussion? And I think they are helpful to the discussion in many ways. The administration officials' views that have talked about inflation not being as big of a problem post the tariff announcements and the rate structure being more restrictive than it likely should be have kind of been vindicated by what Jay Powell did in Jackson Hole. He basically said, you guys were right, which is what Chris Waller has also been saying on the board, and that's why he dissented, as did Mickey Bowman. So I don't see any problem with folks in the administration having discussions about one of the most important things in our economy, which is the level of interest rates. I mean, I think it's open game for everybody.
Dude, these people, all of them, whether it's Waller, Bowman, David Zervos, they're all trying to become the next Fed chair, and they're trying to be so, politically correct and make sure they don't interrupt Trump and or disrupt Trump and like upset him. And I'm left with a question like, why does everyone want to be the Fed chair? It seems like a horrible job. Like, you are the person who is responsible for the cost of capital for people to buy a car and to get a mortgage. Like, it's a very stressful thing. And I guess it comes down to like the legacy of being a Fed chair is something that these people like deeply, deeply respect. And, the whole concept of being inside of the Federal Reserve is having an opinion on interest rates and inflation. And I think all of these people feel that the history books should have their opinion held on a pedestal, like a Paul Volcker, right? And that's kind of the way they perceive the adventure of their life, to be rooted in the ability to have their opinion magnified as the Fed chair. It could also be just for pure power, right? You get a lot of power when you're the Fed chair, even though you get yelled at from every single direction. So it is interesting how they're fighting for this. Kevin Hassett, Bloomberg reported last week, is actually number one on the list. Now, maybe they're wrong about that. Palantir, by the way, 159, that's up 1.2%. Kevin Hassett, who's the national economic advisor right now, I think that makes sense that he would be the Fed chair because he's the closest to Trump out of all those guys. Waller and Bowman are not talking to Trump every day. Zervos is not talking to Trump every day. Hassett's in the Oval Office with Trump and Lutnick and Bissett every single day. So, like, the idea that Trump wants someone who's really going to be on his side, I feel like it would be Kevin Hassett. The question is just going to be who ends up doing it. Tesla and Palantir both getting some green candles right here. Tesla 346 just now slightly going green, and Palantir trying to get to 160 again. Uranium stocks, nuclear stocks, all of those catching a bid, which is nice to see. Consumer confidence was good. Why did Sundar just tweet 3 banana emojis? Is there something I'm missing here? Why did he tweet 3 banana emojis? Sundar is not the type of guy to tweet an emoji like that. 3 bananas. Let's ask Gemini and let's see what Sundar is doing. Let's see. Let me frame it like this. Your CEO just tweeted 3 banana emojis. Why? Let's see if it recognizes that your CEO is Sundar. Okay, it says, I don't know that he did that. I'm telling you he did it. So tell me why he did it. I can tell you about a similar widely reported incident from 2017 involving an emoji. At the time, a user tweeted a screenshot of the different ways Google and Apple displayed a hamburger emoji, specifically pointing to the Google's version, put the cheese on the bottom under the patty. This sparked a huge debate online, and Sundar Pichai, in a lighthearted and engaging way, said he would drop everything to fix the issue. Okay, Gemini's not helping with anything. All right, we don't know. Gemini doesn't know either. Is it about a new model? It's going to be a new model about Google AI Studio or something. Gemini can't do shit, bro. Can't answer anything. Give a link to the tweet. Okay, let me give a link to the tweet. Maybe. Can they handle links now? I haven't really tried it with links. Here is a link to it. Here is a link to it. Let's see. Maybe that helps. It's got to be some AI thing, bro. It's got to be some AI thing. I have tried to find the tweet you mentioned, but I was unable to locate it. Okay. All right, Gemini. Whatever. S&P goes green. S&P goes green. Nano banana image gen model. Is that what you guys are saying? Nano. Is that a thing? Nano banana. Oh, I think it is a thing. Nano banana AI. Oh, yeah. Okay, makes sense. Okay, we got it. Nano banana AI is here. Gemini 2.5 flash image preview. Wait, can anyone use this? No, this is an AI studio. Okay, so they're going to be competing now with Grok Imagine, I guess, in regards to image generation. VO3 already has their video generation. Oh, they have one right here. Could I use it? Oh, yeah, I could use it. Hold on. So I could say something. Okay, so show me a picture of a dog eating a chocolate cake. Okay, let's see. Let's see what we get. Wow, dude. This is so cool, bro. Look at that dog. Look at that. This is so cool. This is the worst it's ever going to be, bro. This is the worst it's ever going to be. Oh, wait. Dogs can't eat chocolate. Oh, wait. Oh, my God. I'm about to get so canceled for that. Oh, my gosh. I didn't mean to say that. I just realized dogs can't eat chocolate. I'm sorry. I'm sorry. This is why I don't have a dog. Dude, I like chocolate cake. I forgot the dogs can't eat chocolate. You know, it was funny. I was at summer camp once, like 7 years ago, and my friend had a dog and he was eating some chocolate and he left the chocolate there for a second and the dog started nibbling on it and he was freaking out. He was like traumatized. He was trying to make sure that, you know, like he didn't kill his dog. That apparently that trauma did not stick with me because I said a dog eating a chocolate cake. But it's like still a cute dog, even if it's not supposed to be eating that cake. So anyway, that's a good image, bro. That's a good image. Okay, let's do another one. Show me an image of a let's do of a guy holding, or let's do this. Of a guy juggling let's show me an image of a guy juggling 50 iPhones. Let's see. The reason I said this because I'm looking at my iPhone case just now, and that triggered me thinking of iPhones. I said the number 50, so I wonder if the model would be able to. Whoa. Okay, that's definitely not 50. But and they actually put the Apple emoji on it, so it's kind of, and now people are watching him too in the back. That's kind of cool, bro. It's obviously not perfect. It's definitely not 50, but it's not going anywhere. Some of these iPhones are cracking on the floor. They're crashing. All right, where's Google stock? S&P just went green, 643. Google trying to go green, 206.92. It just feels like this is the worst these models are ever going to be. If that's the case, then we should continue to get more momentum. That's Mr. Beast and AI. That's 100%. That's Mr. Beast and AI. Yeah, that's not exactly juggling, but again, these models will just get better and better. That was quick too, right? That took like 3 seconds, and we got an image, which is not so bad. The one thing I will say, and I was saying this last night with Tanner and Roy, is I do think Elon's getting a bit desperate for people to use Grok Imagine because he is tweeting about it like 50 times a day. It's getting to the point where it's actually annoying. And I'm an Elon fanboy. I like Elon. I own Tesla. I have my own. I bought a Tesla, right? Like I respect Elon. I know a lot of people hate him. I think he's very inspiring as an entrepreneur, as a founder. But I mean, some of the stuff he's tweeting about Grok Imagine is just getting to the point where I don't want to see some of his tweets. And I also think that, you know, he's using an appeal that is more rooted in sexual imagery versus like just, hey, here's what you can do with Grok Imagine to try to get people to, you know, use it. And it's just weird, bro. Like that stuff popping on your feed is just weird. So to me, Grok is a great product. I pay for it, but I don't want to be incentivized to use it with the way Elon's promoting it. And I think the way he's promoting it is because ChatGPT is really winning in this game and he needs some angle to differentiate. ChatGPT is obviously not going the sexual angle because they don't need to. Also, it's weird to go that route, right? So it's like, I don't know. I don't like it. I don't fully like it. Palantir back to 160. There you go. Palantir 160.25. That's up 2% on the day. And UUU Energy Fuels, that one is up 21%. I guess there was some news about these guys. Let me see if I can find the specific news. They're a miner in Texas. Energy Fuels and Vulcan Elements join forces to advance U.S. Earth magnet security, rare earth magnet security. Vulcan Elements, I think that stock is also public, if I'm not wrong. I might be wrong. I don't see them public, but that's why that one's getting some momentum. Advance U.S. rare energy or earth magnet security, energy fuels, and Vulcan elements. Okay, cool. So, boom, that's showing you why UUU is up. Energy fuels right here. And then Palantir kind of following through. That's up 20%. Again, the energy trade is not going anywhere, continuing to get momentum, and it makes sense why it's getting that momentum. Look, the Citron research report, I mean, if he started shorting at 185, he's up on his short at 160, but he says it's going to go to 40. So for him to really make money, this thing's got to collapse. I don't know if Citron's going to be right about this, dude. I really don't think they will. They're already deleting their tweets, kind of taking back some of their words. It just feels like holding this thing short for a $40 stock price might not be easy to get there. Tom Lee's at 10:45. Tom Lee's at 10:45. He's running a little late, but he'll be on in about 15 minutes. AppLovin's up 3%. Not too bad. Furch said I invested in energy fuel since $5. Wow, not bad, dude. You got a little bit of a triple based on that. Wow, AppLovin, 470. Is Thomas Petterfy on? Let me see. He is the IBKR founder. His company just got into the S&P 500. I think he's about to be on, and then we'll see what he has to say as well about getting into the S&P. But that stock so far, not really being affected. AppLovin right there, 470. Google at 206. The VIX is up a little bit, but still below 15. Duolingo 319, and then Disney, that's at 118. Amit, who was the first CEO you ever interviewed? Believe it or not, it was the name of Richard Barlow, CEO of Ouija. Fortunately, Ouija went bankrupt, but they tried. They really did try. They were a SPAC in 2021. Palantir partnered with them. They just weren't able to continue the momentum. But I think he was the first official CEO I interviewed. And then after that, we had Vlad and then Sham. Sham's not CEO, but yeah, Richard Barlow. He was a great guy. Again, it was just the company didn't deserve to be public, right? And like that was 2021. Now I hope the SPACs that we've been seeing and the IPOs we've been seeing are like legit companies that can stand the test of time. And even if their stocks don't go up, I hope they can stay public. But 2021 had a lot of stuff that went public, and it just probably didn't deserve to get there. We got the Dallas Fed Texas Service Sector Index of General Business Activity. That was 6.8 versus 2.0 in July. That's good. I think that's why the S&P is getting a bit of a bid right here. Yeah, wow, that's a big beat. 6.8 versus 2.0. Holy crap. Dead Fed Services Index. And then the revenue index is 8.6 versus 6.3. It increased 4.8 points month over month from 2.14 to 6.8. From July versus August. Dude, business activity is there. Like, and that might not be the best for inflation, but it's definitely not the worst for the economy. You are seeing business activity, whether it's retail sales, ISM now back above 80. You're seeing a ton of momentum. And that's leading, I think, to kind of the S&P maintaining its multiple, along with obviously the expectation of rate cuts that should be out soon as well, hopefully in September. Did I say dead phallus? Did I actually say dead phallus, bro? I meant to say Fed Dallas. Did I really say that again? I really do have spoonerism then. If I really made that mistake, I legit have spoonerism, if that's the case. Which is wild. Absolutely wild. Okay, I think we have Thomas Federy on CNBC, and let's see what he has to say.
Very much. It's only taken us 48 years since we started on the floor of the Amex as options market makers.
I'm assuming you think a lot of this is thanks to the volatility we've had in recent years, quarters.
Well, it's mostly thanks to the rise in the option markets, in the greater and ever greater volume in the options markets, because you see, most of our customers are professional options traders. So that's why the firm has grown so greatly over the years. But
Right.
this is a huge surprise for us because, you see, we didn't expect this because it has never happened that S&P would induct a firm that is still more than 2/3 owned by the original founders. So, or for that matter, a firm that has less than 3,500 employees.
He owns 70% of it. They have less than 3,500 employees. He's worth $75 billion. The company's worth $105 billion. It took 48 years to get into the S&P 500. It's quite incredible to see how this played out for IBKR.
So it's a fantastic surprise. It's great.
In general, I mean, and now that you're in the seat of inclusion here, is there in general a good way to trade a name that gets included to the index?
It's fantastic. Absolutely, yes.
What's your view on the options market overall? And I guess also as a corollary, the share of options volume that is retail driven. How's that going to shape up in the next couple of years?
Well, you see, it's been rising for the past 54 years, so I assume it will continue to rise.
In general, you don't see much that could throw this overall rally off course, do you?
Oh no, the rally is in good place because you see that much of the regulation, they're doing away with the regulation. That's been a huge burden on business. So I think we are looking forward to a great stretch of next 2 to 3 years.
Tomas, you know, speaking of obviously the stock has done extremely well this year. We've just taken a look, up over 100%. You know, I am curious. You're talking about, I think, or you've said previously, you know, indefinite 20% customer growth with no incremental capital needed. How is that possible?
Well, as long as you do better than your competitors, the customers come to you. So, but you know, generally there is more and more recognition of capitalism and free enterprise and investment in free enterprise all over the globe. So it's still, you know, there is still a huge runway ahead of the entire industry globally.
Yeah.
All right, so there you go. IBKR officially in the S&P 500. By the way, guys, it is now going to be 11 a.m. It is going to be 11 a.m., not 10:45. Don't shoot the messenger. It's his schedule. He's a busy guy. He's looks like the train is continuing to get delayed, but they just text me, is it okay if it's 11 a.m.? So should be on in about 15 minutes. But he will be here. Again, this stuff kind of happens whenever you're scheduling guests and stuff like that. He's too busy buying Ethereum. Yeah, he's too busy buying his. If he does it from his office, then we're going to see his bed in the background, which has become iconic at this point because it shows you how much the guy works. Opendoor right there up 10.4%. Apple 226. Rock Lab 49.50. Ethereum at 4,500. And that's what we got. It's 11 a.m. at the party. Exactly. It's 11 a.m. at the party. He's getting me a birthday gift. Yeah, that's what he's doing. Dude, in general, the IBKR story is just incredible. The fact that he owns 70% of a public company. I mean, what founder today owns 70% of their stock? There's not that many that are above a 100 billion market cap as well. So it's kind of cool. You know, I guess for him, it's like, it's cool, but it's also like, you know, he's lived his life and he's seen a lot of success. So it's like, all right, cool. S&P 500 for someone like Vlad, who's, you know, 38 years old, it would be a big moment to see that happen. But, and I don't think he's gonna have to wait until he's 80. It's just, hopefully it happens in 2026. I think at some point the growth becomes undeniable and that's what will lead them to get into the index. But it's good for IBKR. And it's good for shareholders in the company as well. Yeah, Zucks does have controlling share. I don't know if it's 70%. I think it's around 35, if I'm not wrong. But he does have Class F shares as well. And he, you know, Nothing can happen at that company without Zuck's giving them the okay. Will it make him mad if Opendoor hits $10? I will not get mad, dude. I just honestly, I don't care about it. Like, if it gets to 10, I'm happy for people that make money in it. I'm at the point where I do not want to risk real money on this thing, on the bet that it goes to $10. I think playing with a couple $1,000 in gambling, that's fine. There's not that big of a deal. If you genuinely believe there's an Opendoor thesis, then you get into it. And if you want to put in 50, 100 grand, 200 grand, whatever it is, and ride it up, I hope it goes higher. But like, look, will there be FOMO if it goes to 10? Sure. But will I genuinely like be upset? Not really. Because like, I just don't think there's a thesis. And I don't deserve to get the gains if it goes to 10 because I don't see the thesis. But if it goes to 10 off no fundamental change in the business and just pure hype, then I also don't really care about being part of it because hype goes up and hype goes down. And the sort of immature version of me 5 years ago would be upset about it. Like, oh, why didn't I get in? Now I'm just like, all right, cool. That's fine. I'm happy people are making money. I feel like that as you get older, bro, you're like, you don't have to get into every play, you know? The plays you're in, you just want to make sure they're the right plays, but you don't feel sad about the other plays. And I've tried to understand the Opendoor thesis. I really have tried. I don't get it. I just don't. And that means if it goes up, I don't deserve the gains. But I think there is a coordinated level of pumping that's happening here, and it feels very weird. And I mean, look, it's 10x the stock, so it's already done a move so far. The question is, can it continue to increase that momentum? And that we're going to have to see if it ends up playing out. All right, so while we're waiting for Tom, here's another clip that I wanted to play from Josh Brown, particularly around what's going on with the reports of AI being a bubble, or like what's going on with this MIT study that really got a lot of people, wondering what was happening. So let me pull this up right here and show you guys Josh Brown's perspective on this MIT AI is dead study that came out.
Suddenly MIT comes out and says this little research number. A few media outlets pick it up because, let's be honest, it's a fun story. And then suddenly we see this drawdown in the NASDAQ. We see the S&P lose $1 trillion in value. And I just think it's fascinating that this is what brought down the markets. And I agree with your point where it's like, this indicates that there's a level of sensitivity in the markets right now, which is interesting. But I think back to a month, 2 months ago, it wasn't a missile strike on Iran that brought down the markets. It wasn't the president firing the chief of the BLS for supposedly falsifying national economic data. It wasn't even the reintroduction of tariffs. I mean, we saw some small corrections, but the level of correction that we're seeing in tech itself, it didn't really compare to this. I don't understand that. How is it that it was this little obscure research report from a little division out of MIT? How is it that spooked the markets?
I think it's because all of the gains in the market this year have come from the AI infrastructure theme. There's no other show in town.
Yeah.
Even the GLP-1 stocks have been falling. Like nothing else is working. So then people say, all right, well, what are the top performing sectors this year? Utilities, tech, communication services, and financial. I think financial's neck and neck for the third spot. All of those are directly related to earnings growth that's coming from the AI infrastructure build out. The utilities is obvious. I don't need to explain it. These stocks have just undergone a once in a century re-rating. They're all at 52-week highs. They all look unbelievable. And the story that they're telling investors is that they are submitting formal proposals to their regulators for a rate increase. And the justification for the rate increase is the fact that they need to spend money, CapEx, in order to keep pace with the demand coming from the hyperscalers for more electrification needed to facilitate the ubiquitous use of AI. There's one particular utility called Dominion, which I wrote about recently for CNBC. Dominion is like this 100-year-old company, sleepy, boring utility, right? And it just so happens they're based in a place called Loudoun County, which is the cloud data capital of the world. It's in Virginia. And the reason it's there is because a million years ago, AOL was based outside of DC. And that's where like the first They weren't calling them data centers back then. This predates even cloud computing, but like that's where the first cluster of this stuff started to be built. And then Yahoo came, and then Google came. Now Amazon has spent $50 billion there. So like this is an example of a utility that is completely transforming itself because of demand coming from hyperscaler AI infrastructure. And that's why the utilities are leading the market. Why tech is working, that's obvious. Why communication services is working, that's obvious. Keep in mind, Meta is in that sector. Alphabet's in that sector. Why financials? Why are financials so good? Because Wall Street came alive this year. We have IPOs, CoreWeave, Figma, Bullish, believe it or not, Circle. Like all of a sudden, the amount of activity, private equity, private credit, underwriting, M&A is back. There are deals again. Like that's why the financials are. But all of this is coming as a result of the AI build out, and then the ripple effect coming. So you asked the question, like, I don't understand. We're shooting at Iran and nobody cares, but an MIT study and a Facebook rumor surface that could be negative for the AI theme, and the Nasdaq loses $1 trillion in value. That's why. It's the whole thing. There's nothing else going on. GDP growth is sluggish. No offense to anyone who believes otherwise, or they think the data is fake. The labor market is okay, but not as good as it was last year, right? Wage growth is gone. So now you have price growth. You have inflation, but no wage growth. Not a great recipe. That's probably why we're going to put a communist in the mayor's office in New York. Like, what other stories are out there? What else is happening in the economy? And the answer is nothing. It's the high-end consumer who owns stocks out there spending with abandon. The reason they're able to do so is because their portfolios are absolutely juiced by record insane amounts of CapEx being spent on AI. And if you pull that leg of the stool away, there's no way we would have had a 30% recovery off the Liberation Day lows in April. No chance. Not.
I think he's right, dude. I think he's right. And I think that is why when I'm hearing this AI CapEx bubble, I'm like, well, that's the entire market. So if you're saying AI CapEx is a bubble, then the entire market's a bubble. Like Josh Brown is absolutely correct on that. That is the reason why we've been able to rally as hard as we have, which then begs the question, who is propagating this narrative that it's a bubble? Because from the numbers that Josh Brown laid out and the numbers we've been talking about for the past 3 weeks on this channel, from all the big tech earnings we see, it doesn't feel like a bubble to me. And if it is a bubble, it's a bubble that's going to last for a long time, not 12 months. So you then start thinking, all right, do the hedge funds want cheaper shares? Are they trying to push media outlets to pick up these stories to get people to get scared out of their Nvidia because they think Nvidia is a bubble? Like, because I think Jensen on Wednesday is about to show everyone how much of a bubble they are not and how big AI really is. And, the people that sold it back at 168 last week because of some MIT study, it seems ridiculous at this point. So I think the theme of the story is you hold long and strong on these AI names. Obviously, you have to be selective with certain names like SMCI. Good company, bad margins. They're going to play a role in this AI infrastructure build up, but they might not be able to make a margin on it. So maybe that's not the best opportunity versus like a VRT or VST that has better margins. But the point is that overall sector of growth that is underlying the foundation. It is the foundational element for why we have returns in the stock market in 2025. I don't think that's going anywhere. It seems like that's not stopping. Derek, shout out to you. Derek Dagger, he says, don't bet against NVIDIA. He was at the Miami meetup. He actually works at NVIDIA. He gave me an NVIDIA shirt, so I'll be wearing a nice little NVIDIA shirt on the NVIDIA earnings on Wednesday. I mean, it was funny. I was talking to him. I was just like, so when DeepSeek happened, and I think he's been working at NVIDIA for like 10 years, were you guys laughing? He was like, bro, we were laughing our asses off. He was like, we knew reasoning models were going to happen. We knew that, AI compute was going to change in terms of how inference was going to be involved, which is essentially sort of the innovation that the DeepSeek model put out into the world in regards to reasoning. And the market thought that means NVIDIA is dead. And the NVIDIA employees were like, you guys are stupid. And they were just laughing. And as a result, we as retail investors got to buy the dip at $85 on NVIDIA. which seems like a generational opportunity because of DeepSeek. And, now Jensen might take this bad boy to 200 by the end of the year. So it's kind of incredible. Kind of incredible to see how this is all playing out, but I don't think it's going away anytime soon. CoreWeave, that one as well will be a beneficiary. That's up about 1%. Again, they had a lot of insider selling over the past week. That's why that one's been hit. And then Nebius as well has done phenomenally well. That's up another 4% of the day. That stock was $18 back in April. It is now 72. And so that's what you got in this AI data center trade. Is Trump live? Is he actually live? He did sign some executive orders yesterday. He did meet with the president of South Korea yesterday as well. Okay, he's not live, but I think he is going to go live in a bit. Those executive orders. Oh, he's holding a cabinet meeting. Okay. Yo, get ready to eat some Krispy Kreme. We are about to see some glaze in this cabinet meeting. They're going to go to Pam Bondi and Lutnick and Hegseth and all these guys. It's like, my dear president, you have done such a good job at building this country. It's like we've seen 2 of these at this point over the past couple months, and it's entertaining to say the least. Brent Thill on Palantir. He's back on Bloomberg. Let's see what he has to say about the state of Palantir right now.
Rectified anything for you thus far?
No, I mean, it's still 70 times revenue we've ever seen a software company trade at this multiple. So as we've said, you can touch multiples like this, but you can never sustain or live. It's like living on the top of Mount Everest. You can get there, but you can't stay there. So again, the fundamentals of this company are blowing anyone's expectation, including ours, away. For them to put up a rule of 90, which is top line and bottom line margin combined equaling 90, is unheard of. So they are effectively on a different planet as it relates to their fundamentals, but the valuation is there as well. So I think we've tried to separate the two and saying the company is performing extremely well. We don't see anything like it in our coverage universe. However, we have seen this before where you saw Snowflake, Datadog, others that traded at those similar multiples. They never sustained, and it was a tough fall. So the minute the revenue growth decelerates, and we've had 8 quarters of accelerated revenue growth, once you see that decel, the multiple is a concern. So
do you have a view on when that
phenomenal
deceleration will actually have? Because you've said in your notes that you've got limited visibility, lumpiness in quarterly bookings. I mean, are this actually going to start showing up and convincing the retail investor that has helped drive it up and to the right?
Yeah, I mean, it's a good point. So the majority, a huge part of the investor base is retail. It's about 40%. And so our clients are institutions. And I don't speak to a lot of clients in Palantir because our institutions have basically valuation thresholds that they can't break through. And they've all seen this movie before in the last 20 years in our group. So from a retail perspective, it can keep working. When does it break? We don't see a breakdown in the fundamentals. I think the question becomes, the comps are going to start getting harder. And can they sustain that level of growth? And Dr. Karp, the CEO, has said this, that they expect headcount to actually shrink and they can grow revenue 10x on a shrinking employee workforce at Palantir, which is, to me, kind of mind-blowing, because if you think about it, you need a lot of Palantir people and services people to get the software working. How does this happen? Does AI make the software work? There's a couple things that just, I think everyone's trying to make sense of. That's one comment, that how do you grow 10x with that tiny of a workforce?
And Brent, you've outlined the issues of employees, but there are upside risks that you also detail, like that they actually do faster than expected monetization, particularly of the AIP, or they do get sustained commercial momentum. How long can the market remain irrational and others remain solvent?
Well, the market can remain irrational for a while. Again, remember, you're dealing with a retail install base. You're not dealing with an institutional base. So as big in the stock. So I'd just say that this could continue to go on. And this is the area that we've been wrong, which is the magnitude and the duration of how long it would sustain. I mean, if you take the next closest multiple in software, and this is close to 70 times, it's Cloudflare at 20, 25 times. And then it falls off a cliff from there in terms of the multiples across our coverage. So you're just really dealing with something that is super unique. Their business is super unique. The execution has been incredible.
Right.
So there's been no real reason fundamentally to sell the stock other than, hey, the multiple is where it's at. So I think it's a hard one because
some people will say that Brent Thill sounds like this guy.
Why are you out here specifically protesting Palantir?
I didn't even know what Palantir was. I'm here for the weekend from Florida.
Why are you?
That's what you got going on. I mean, look, Brent Thill, he's been making the same argument for 2 years now about the valuation. I get it. I also think the valuation is aggressive. But at the end of the day, if the execution continues to execute, and that is what investors are betting on for Palantir, that it will continue to do that, and they've not given you a reason why it won't, that is why it sustains its multiple. And honestly, that's what unicorn companies do. They continue to execute. They continue to grow. They're going to have some hiccups along the way, but if they can really break out and get into an S-curve, which is what we've seen happen with Nvidia, it's obviously what we've seen happen with Amazon back in the day, like that is when companies really take off. And the expensiveness of their multiple becomes cheap over 10, 15 years. And I think that story can happen with Palantir as well. All right, guys, don't kill me, but they said 11:10. Don't kill me. Okay, this is not me. Okay, this is them. Tom Lee is a busy guy. He has a bunch of things going on. Like, they just texted me 11:10. So for those that are here for Mr. Lee, we're gonna have to wait 12 more minutes. And then at 11:10, if it becomes 11:30, then we're gonna have to wait till 11:30. However, although he's not here yet, there was, I mean, I'm pretty sure, have most people seen the podcast already? This podcast has like 350,000 views. So I'm pretty sure a decent number of people have seen it. But this was his take about why we are still early in this bull market.
Let me ask you this. So you have some charts showing the equal weight PE for the S&P 500. And it's been in a range over the past 6 years. It's averaged 16.3, and right now it's 16.9. On the next chart, you've got all these different things that we've experienced and that we've brushed aside. The resiliency of the stock market.
I like that
From
you used eggs for the inflation cycle.
the inflation to the fastest Fed hikes to the tariffs and everything in between, supply chain issues. Do you think that this is, and I'm sure it's both, more of a fundamental tailwind from the AI story and or a combination of between inflation and the length of the bull market and the psychology of the market? There's so much money waiting to be deployed on every single dip. Is that, which do you think is more responsible, or is it both?
Well, I'll answer it by saying I've started off my career as a stock analyst. Okay. So imagine we have a stock. Okay, let's call it, XYZ. And we shot it full of holes. Like they should have been kill shots 6 times, right? Because every one of those was a kill shot for this bull market. And yet this thing.
What are the things? The inflation cycle.
Well, for COVID, number 1.
Fastest Fed hikes in history.
Yeah, and then the bullwhip chain effect was number 2. The fastest Fed hikes, the fastest inflation cycle in history, the fastest Fed hikes in history, the Trump tariff shock, and then U.S. bombing Iran's nuclear
Each of those should have produced a bear market.
Yeah, should have killed the bull market or even killed the economy.
So what does that tell you?
Just like you don't even have to know market history, just common sense. The United States is bombing an Iranian nuclear facility. Therefore, by the SPUs.
Yeah, you never would have
morning. Nobody would do it.
If you asked me in January, I'd say, okay, we got a risk of a bear market.
Right.
Yeah.
And none of these things has produced a sustainable.
That's right.
We've had like bear markets, but not a secular bear market.
Yeah. So let's say that this stock was 16 times and we shot it 6 times over 5 years, like just kill shots.
Yeah.
And it grew earnings every year.
Yeah.
We would say the PE has to go up a lot.
And it hasn't.
It's actually lower. It's a cheaper market.
I think that was one of the best points from that interview. And I think that's, that's not a point I'm seeing a lot of people making, which is that we've had so many market moving events to the downside over the past 5 years, and stocks have gone up, but the multiples have gone cheaper. And the multiples have gotten cheaper primarily because the earnings have gotten so good. And obviously some stocks are expensive on a multiple basis, but the broader S&P 500, the broader equal weight S&P 500 is doing okay. Nvidia right there, 181.43. And that to me is a reason in and of itself to be bullish and to think this bull market has lots of legs associated with it. If those earnings can continue, and given the growth in CapEx and overall ROI from AI, I feel like that should continue. And we kind of need it to continue, because if we don't, then there's nothing to be excited about. But that is the story. And it doesn't seem like that story is going away anytime soon. We also have financials that are participating, right? Financials have done great this year. XLF, Bank of America. I mean, all these stocks have really started to show momentum because of deregulation. And then you got the final part of this, which is crypto, which really, crypto the Genius Act. If you read through the Genius Act, the level of bullishness that act is for Ethereum in particular is monumental. And we haven't even begun to see the effects of that. So those three things together, I think, is what characterize how this bull market can eventually play out. Tesla robotaxi expansion. We saw that news last week in Chicago. I don't know if there's any been new things introduced since then, but Tesla right here, 346. They're applying for a license in Chicago, the Bay Area, LA, and then, a lot of people are rumoring New York is next, but New York's going to be a tough one. So far, they have Austin and the expansion into Austin. The fact that you think you are early on ETH is hilarious. I think, obviously, early on ETH at 1,500, 2,000, like in 2022, that is theoretically early on ETH compared to 4,000 or 5,000. But now is when people care about Ethereum. And I think that in and of itself is a reason that it could be early. I mean, if you estimate what the use cases look like and you expand them, and I think Tom Lee's model, he takes Wall Street, 20% of what he thinks Wall Street is going to do in terms of embracing Ethereum from a tokenization perspective. What that does to the price, he has a target of around 15,000, 16,000. I mean, that's a 4x from here. That is technically early. Bitcoin, when it went from 15 to 40, you would think you're not early, but now it went from 40 to 100, 2.5x. Like 40 was pretty early. Now that Bitcoin's at 110. So to me, it's not about not buying Ethereum years ago. Like obviously you had to be super early in 2017, 2018 to be like an OG member. But if the growth is actually happening now, that is where it feels like being early is not crazy. So we're going to have to see. We are going to see. Lords, thank you for the $50 super chat. We are early in BMNR. Thank you for being here, and thank you for that super chat. I also think BMNR is early as well. I mean, their NAV now is updated. What's their NAV? Their NAV is 39.84. So you got 39.84 of net asset value on this thing. You could definitely argue it deserves a premium. So 51 divided by 39.84. Sitting at a 1.28 NAV. Not crazy, because that gets to 1.7, 1.8 and stay there. Yeah, I think so. As they continue to acquire more Ethereum. And then eventually stake it as well. So we're going to see how this plays out. Did you see Vlad's podcast on the Iced Coffee Hour? Yes, I saw it. I think it was good. I think, now that I've watched Vlad many times, the interviews are, for me, getting a bit repetitive because he says the same stuff. But, that's good because he has to educate new audiences about everything that's going on. But there's nothing I got in that interview that was different about Robinhood that I haven't heard. They did talk a lot about the GameStop stuff, and you got to clarify a little bit more what actually happened with GameStop. But yeah, outside of that, I'm happy he's just, I think he's done I think he's legit done 15 podcasts in the past 2 months. And so whether the podcast is big or small, he is continuing to get more attention. Here was a piece of news yesterday that we didn't talk about. Elon sued Apple and OpenAI recently. Here's some coverage on that.
Earlier this month on X, and now he's gone through with that threat. Ultimately, could it do anything to the relationship that OpenAI does have with Apple and vice versa?
I don't see so. I mean, if they consider this an antitrust violation, that being the courts or the government or what have you, what Apple would have to do is open up what they call extensions within Siri. So right now, the OpenAI relationship is what's called an extension. In Siri, if it doesn't understand one of your commands or it doesn't have the knowledge to answer one of your commands, it uses OpenAI's ChatGPT as a fallback option. Now, when Apple introduced this functionality, it said that they would have other available AI services, right? And so they said that Gemini would be there. Gemini never actually came to fruition there. There's a lot more behind the scenes with the search engine lawsuit, working with Gemini on other facets that have gotten in the way of that. But it's possible that they open this up to third parties, allow XAI, allow Grok, allow Claude, allow different AI services in there, and that would certainly solve the issue. And Elon is right. They do give pretty hot promotion to some of the other AI companies in the App Store. They haven't done a lot of that promotion for Grok, and so maybe we'll see more of that from Apple. But all in all, I find this lawsuit to be frivolous. I don't personally consider it an antitrust situation, but it's obviously not up to me to decide. And it is a little surprising that Elon Musk actually went through with this.
Go to the context, of course, that you put forward in a story on Friday, that the relationship between Gemini AI and Apple does look like it might get closer.
So Apple's building a new version of Siri for next spring, and it's obviously much needed for reasons that I don't have to spend an hour listing now. But they basically have two paths. They can go completely in-house with the new version of Siri, and by in-house, I mean self-developed large language models to power it, or they could use a third party to help out in terms of building the new Siri. So they've been talking to a bunch of possible partners to see if they're willing to power aspects of that new Siri. So they've been talking very much to Claude from Anthropic, and I believe eventually they'll reach some sort of agreement. But more recently, they started negotiations with Google about Google building a model based on its Gemini technology for Apple as well. So we'll see where they ultimately land in a few months.
I think Elon, again, he's upset that Apple and OpenAI have been getting, or OpenAI has been getting all the attention, and Apple has been, maintaining the attention that they've gotten as well. So, I mean, look, when Elon's not helping his case when he tweets some of the stuff that he's tweeting about Grok, because Apple probably doesn't want to be associated with that. But nonetheless, I can understand why he's pissed off about OpenAI having as much excitement as they have, given he funded OpenAI. Nubank, by the way, 14.30. Nubank, incredible quarter from $11 to 14. It's been a nice 2-week sprint for Nubank. Now, hopefully that can maintain it. 16 is all-time highs, 16, 15. So Nubank doing all right. But it's going to be a debate between Grok, Gemini, and GPT. I think all three will win. The question is, how are they going to get the verticals to achieve the next level of user growth to get to those billions of users on those platforms? Nvidia right here, 181, Palantir 160.5, got Amazon at 228, Constellation at 313, VRT at 127, and then Tesla right here at 346. All right, cool. So I think it is time that we have a guest come on to this show. I know a lot of you guys have been waiting for this one. Ladies and gentlemen, this is the Market Open debut of someone who has deeply affected my life, just from not only a financial perspective, but obviously just from a market perspective and being able to better understand what it means to be an investor. Obviously, getting commentary from someone who understands what they're doing and is willing to be contrarian and then be right at the same time, which is the hardest thing in investing, is not easy to do. And so for retail investors, he has definitely made not only a lot of us a lot of money, but he's helped us think about the world of investing in a way that is fundamentally differentiated. And I am so, so happy that he is making his debut on the Market Open. Ladies and gentlemen, Mr. Tom Lee. Tom, how are you?
Great to see you.
We have the infamous bed in the background, which has done the numbers for you.
Yes, that's right. And yeah, it's an actual bed. I do use it on occasion. It's there.
Yeah, it makes sense. Sleeping in the studio, as they say. Your greatest nights or your latest nights or your greatest nights, I think is the line from Drake. Tom, we really appreciate you coming on the show today. My audience is very excited to have you. I think, we got a lot of things to talk about, but the first question here is something that you've been saying for the past couple of weeks now, which a lot of people just can't seem to fully understand, which is, why is this the start of a new bull market, given we've had such a good 3 years in this current bull market?
Yes. I think what we have to think about is definitions, because early April was a low, and the market made a sizable move. And so, and I congratulate your audience, because I know we talked about that. You know, it was you and your group that was buying stocks at that level and already benefited from a 33% move. But the institutional world operates really very differently. That they would have viewed that April low as a period where they were forced to de-risk because volatility was high and uncertainty was high. And, you know, in general, institutional investors cannot buy when they have those parameters, right? When they don't have visibility and there's volatility. So they de-risked. But their all clear signal comes when a couple of things happen. Either the clarity returns, but as you know, a lot of people will be on television and saying that we still don't have that clarity because we don't know if we're through the inflation surge or a tariff's going to hurt the economy. So the visibility is not there. But then they have a second way of actually becoming willing to buy stocks again, which is you break an all-time high. And then in their minds, that's a new bull market. So that's what happened, is that in June of this year, the markets made a new all-time high. And then in July, and then just this month in August, we had the breakaway move, you know, towards 65, almost 6,600. And so the reason that's called a new bull market, and I think it is probably correctly to put it that way, is not only did we have a de-risking correction from February to April, like people literally, you know, liquidated their positions, but we also have not seen the positive benefits of two things yet. A dovish Fed, because the Fed has been on hold. And so you know, you're not really in a bull market if the Fed's on hold. And second is that the ISM, which is really a broad measure of economic activity, that's been below 50 for almost 30 months now. And so you don't really say you're truly in expansion until that's above 50. So once that turns above 50, and that'll happen hopefully shortly after the Fed starts cutting again, then you have not only a manufacturing recovery happening, you know, and especially with onshoring, et cetera, and then plus the AI tailwind. But then if the Fed is cutting, then we have mortgage rates falling, which will help housing. So actually there is a whole series of things that create a bull market. And look, I know it's a continuum for people, because a lot of people are saying, well, I've already been making money in stocks. Why is it a new bull market? But really in the minds of the institutions, it's a new bull market.
Right. And I think that multifaceted approach of ISM above 50, the Fed getting dovish, the AI tailwind, and then mortgage rates unlocking the housing market, that is a pretty logical thesis to put together for why you could be at the start of a new bull market. Is that also why you think the V-shape we've had has been the most hated V-shape rally?
Yes. In fact, I still do Zooms and meetings with institutional investors where they think that this is just simply bubble talk, that stocks have recovered on vapors, because in their minds, central bank liquidity is required to justify a stock move, and the Fed has been on hold since all of 2025, right? So we're at least 9 months in, and there is no central bank balance sheet expansion either. So in their minds, then it's just simply someone who isn't grounded in understanding the Fed drives everything buying stocks. I think that that's kind of the overlying thesis for many people who do macro. But of course, 2025 has proven that that's not the correct thesis. I think what this year has proven is you know, one needs to really look at what are the stocks that are important to the economy. And AI has done fine. AI hasn't cared about tariffs or inflation, and the required infrastructure investment has been very powerful. And that's why the stock market's recovering. But the rest of the economy is doing fine too. And then of course we know that there's like this whole future like coming from fintech innovation. And that I think can really be the second part of that bull market that we see in the next, you know, 24, 36 months.
When your institutional clients say, hey, Tom, we're looking at Opendoor go from 50 cents to $5. We're seeing some of these names catch a bid for seemingly no reason. How do you advise them around what they would describe as froth in the market, do you think it's isolated in a few areas, or do you think that's just a function of a broad-based bull market?
Well, I mean, it's healthy to see in a sense, because you know the nature of the stock market, like owning an equity, is different than owning a bond, because in the bond world, everybody wants certainty. Like they want to make their money back, but in exchange for getting 100 cents on the dollar back on their bond, they have no upside. The stock market world has to work on a different principle, which is really, you have to believe that there is a growth in the future that allows the shares to grow beyond how much it costs for the company to grow, the cost of capital. So I think it's really healthy to see stocks individually break out. The AI stocks broke out and people called it a bubble, but it turns out there was a lot of legs to it. Palantir broke out and people called that a bubble. It turns out it's a juggernaut of a company. Tesla was always called a bubble chronically for a decade, and it turned out to be, really early investors saw the future. So Opendoor rising, I think is not unhealthy. I haven't done the work on it, so I can't tell you what I think the valuation is, but just because it's gone up a lot to me doesn't mean anything is wrong with the company.
Right. And that also doesn't mean like Nvidia's in a bubble because one stock is going up. Right. And I think a lot of these questions, I think you said this a while ago, but it comes down to, would you really sell Nvidia because of PPI or CPI or whatever PI? Like, would you really sell companies that are growing at a fundamental level because of idiosyncratic things in the macroeconomy? Those are things to pay attention to, but are they the barometer behind if you get rid of a long-term position in a company that we know is executing at a phenomenal level? I think retail investors are saying no, and that's why retail investors have done well this year as well.
Yeah, that's right. I think the retail investor is doing their homework. They're saying, look, what is the most important company in the world behind the most important theme in the world? We can't really underestimate how important AI is, because it really solves a lot of problems, and it potentially could even create a lot of good solutions. And then the singular company that is at the center of every single AI effort is Nvidia. So you're right. When it comes to tariffs, and if tariff concerns come up, or inflation, or the Fed, and it causes Nvidia to fall, that's the macro guy's decision. He says, I got to take risk off, so I'm selling everything. I don't care if it's the best company in the world. I'm just taking down my risk. But that's an opportunity for someone who says, look, here's the single most important company. I mean, we're going to get to that decision point on Wednesday, because Nvidia reports, as you know, and I think there's a lot of people that are armchairing this and thinking that there's something Nvidia could say that could make it go down. I personally just don't think it's going to matter what they report tomorrow in terms of where Nvidia is 6 months, even 3 months from now.
Tom, we're going to do a little bit of a Tom Lee inception. I want to play a quick clip of what you said on the Compound and Friends last week.
Speech.
Yeah.
I think we're gonna rally tomorrow.
Okay.
Even if he's hawkish and exerts his independence.
Why? Just because it'll be over and people are waiting for it to be over?
Yeah, because we would expect him to exert his independence, but it doesn't have negative implications because he's already on hold.
I don't think he's going to do like a highly politically charged thing.
Nah. Wow. See, then the market's going to go up even more.
Yeah.
I mean, this is kind of happened almost exactly how you said it. Can you walk us through, because everyone's trying to figure out how the hell are you able to get these things so right before they happen?
Well, I mean, thank you. And thank you for playing the clip. I think one of our advantages at Fundstrat is we are always in communication with our clients. So we have about 400 hedge fund and long-only clients and about 10,000 RIA and family offices. And we are conducting regular surveys, so we understand positioning. We are in a lot of constant contact, especially with our institutional clients. And I think what helps is it really helps me understand where the money lies. Like in other words, what are the pressure points? What are people expecting? Last week, it was apparent to us that people said, look, I know the Fed independence is institutionally at stake, especially at Jackson Hole. That was the whole conversation. So every investor that had exposure says, I'm taking down my exposures. And so we saw stocks leak lower for like a week, like just leak, but the VIX didn't go up. So actually the market was acting as if they didn't expect anything to happen Friday, but they were taking down risk. So to me, that is why it's set up for like a one-way trade possibly, because people were actually essentially pricing in a nothing burger. They said the Fed might not even say anything, but then they thought, well, I took down my risk, so if he says something bad, I've already taken down my risk. But they weren't hedging through the VIX. So I think that's why. To me, like, you could actually see the breadcrumbs pretty clearly, and that's what we're writing about. But it was really confirmed by our many conversations with clients.
And see, this is what I think people get wrong about you, Tom. The haters that are out there that just say you're a perma bull and then like, well, the markets go up. And so obviously Tom Lee's right. It's like, no. There's a lot of data and analysis that you and Fundstrat use, which is why you built such a successful firm, to be able to come to your conclusions. I mean, I remember 2 weeks ago, you said the S&P 500 will make a breakout move to get to 6,500 because you use some historical data looking at when Bitcoin makes a new all-time high, what happens 1 month later, and 1 month later, the S&P tends to break out. And then that's what happened. You're not a psychic, you're using data and history to kind of come to these conclusions, which I think is why people are very excited as well.
Yeah, thanks. Yeah, and we communicate that to our family, the FS Insight family, and the Fundstrat side. We have two businesses, one for really high touch, heavy interaction institutional business, and then FS Insight. And so they can follow our playbook. But you're right, it's interesting. People still might hear what we're saying, but their own personal intuition fights against it,
Right.
Meaning they're going to be like, I hear you, but I can give you 20 reasons why this won't happen. And then they tend to side with those 20 reasons against it.
Right. All right, Tom, let's end off on this I think we'll get deeper into the layers of this overall topic, but Ethereum, you have woken up the entire world and definitely Wall Street to the concept of Ethereum, and you are calling it the most important macro trade of our lifetime. I guess here's the first simple question. What sparked your interest to get bullish on Ethereum as an asset class?
Well, as you know, we're really top-down firm. We look at thematic arcs. And one thing that is really obvious to us is that in the last 12 months, there's been a sea change, partly because of the election, where crypto is no longer considered an enemy or a disruptor of the financial system, but really part of how the U.S. financial system will get leadership. And it starts with stablecoins and the Genius Act. And stablecoins have been the breakout product, the ChatGPT moment. But now with the SEC's Project Crypto, it really is the SEC wanting Wall Street to use the blockchain to actually make America more innovative and actually spread America's financial influence around the world. That's a 1971 moment, because the last time we had such a big sort of structural positive change for Wall Street was when the U.S. went off the gold standard, the U.S. dollar, because that was the moment that the dollar became a synthetic instrument. I mean, think about it. Like in 1971, the dollar no longer was anchored to gold. It could have just collapsed. But what Wall Street did was, let's create a bunch of products and payment rails and financial rails and futures and all these things that made the dollar the central casting, so that dollarization survived even coming off the gold standard. I'll give you an idea. 27% of global GDP is in dollar terms. 55% of central bank reserves are dollar. But today, the dollar is 80% of all financial transaction pair trades. It's become more important even though it went off the gold standard. So Wall Street made its trillions because we went off the gold standard. Well, now we're moving Wall Street onto the blockchain. That is a huge sea change, because now the physical world of Wall Street is becoming moved onto the blockchain. This is a huge opportunity. But here's the thing, Wall Street doesn't want the fastest chain or the chain with like the most bells and whistles. They want a reliable chain that they can build upon. Ethereum has had zero downtime in its entire history. So to me, it's the natural selection. And that's what Wall Street is doing. They're choosing to do their layer 1s and layer 2 tokenized businesses on top of Ethereum. So and as you know, Ethereum is a fat protocol because it's a smart contract platform. So Ethereum is going to capture so much of that value. And we're citing some work from Mosaics and from Fundstrat, but if you just think about it as payment rails moving onto Ethereum and some of the banking, you get to a network value of $60,000 value per ETH. So that's why we think it's one of the biggest macro trades over the next 10 to 15 years.
And so the thesis kind of comes down to, if Wall Street is embracing tokenization and the payment rails that have been traditionally structured around the dollar, gold, are now rooted in a blockchain, Ethereum is your bet to be able to be the beneficiaries of that. And even if it's 20, 30% of Wall Street, obviously not 80, 90%, maybe one day, that in and of itself is a tailwind that is so massive that it's hard for you as a research analyst to ignore that trade in front of us.
That's right. And if you look at that 1971 moment, Wall Street outperformed gold in that 15-year period. So even though people think gold was the play, and it was, and that's why Bitcoin's the play, it's actually a bigger play to play the infrastructure side of it. And that's what Ethereum represents. It represents the future place where Wall Street is building. And it's a fat protocol. A lot of the value accrues at the protocol layer.
Right. Okay, so let's talk about BitMine. This is a stock that a lot of people have obviously been excited about. You are the chairman of the board, and BitMine has been buying a ton of Ethereum, and you guys continue to file and raise capital to buy more Ethereum. I guess the biggest question that I get from my audience and general retail investors is, okay, I get Tom Lee's ETH thesis, but why would I buy BMNR over Ethereum?
Yeah, well, Ethereum, someone can buy Ethereum, okay? But if you buy a proper crypto treasury, that company or entity is growing your holdings of Ethereum for you actively. And I just give an example. When BitMine started on it was started on June 30th, but the transaction closed July 8th, so not even 2 months ago. There was only $4 worth of Ethereum held per share. And so you could have bought an ETF back then for $4 worth of ETH. But as you're pulling up here, as of August 24th, we now have $39.84 worth of Ethereum held per share. So compared to July 8th, when it was $4, it's gone up by 10 times in 7 weeks. Ethereum has only gone up by 50%. So the reason we had a 10x in your holdings is because BitMine is actively managing to grow your Ethereum held per share by using capital markets and attracting the interest of institutional investors. Institutional investors in their funds can't buy Ethereum directly. They need to find a way to get exposure to Ethereum, and they do it through public companies. That's why institutions bought MicroStrategy. It's their way to get Bitcoin exposure. But the reason we're attracting so much interest, because we become the largest and we're raising more than $1 billion per week, is because we are growing that institution's holdings of Ethereum per share. So they know that as a treasury, that's the importance, that an Ethereum treasury company has to be using capital markets and really good, smart ways to acquire Ethereum to actually grow the Ethereum held per share. And as your press release that you highlighted, from just a month ago, we went from 22.84 in ETH on July 27th to just a month later, 39.84 worth of ETH per share. ETH did not double in price. It's only gone up, I think, 15%. So that doubling of Ethereum held per share is really because of our active strategy of acquiring more cash held Ethereum token per share.
Right. And as a result, it's juiced up the volatility, which has made the options market very interested. I mean, as you said, it's the 10th most liquid stock in the market. I mean, that is just incredible to get that much demand and interest. And I don't think, to me, that's a sign of euphoria either. To me, that's a sign of people are interested in a new treasury that's leveraged against an asset class that is finally starting to emerge as something that has a real thesis out there. And that's why option traders and retail investors are interested in in buying the stock. What is the alchemy of 5%? Why do you want to own 5% of all Ethereum?
Yes. Well, there's two real dual things at work. Actually, three. But keep in mind, Ethereum is a proof of stake protocol. So when you hold ETH and then you stake it, you are validating transactions as a trusted vector, and you're getting paid for that with a staking yield. So with the $9 billion worth of ETH held today, that's about almost $300 million of net income for Bitmine. So Bitmine is generating GAAP net income, pre-tax net income. But there's something else that's called the power law. And the power law is the idea that the larger someone is and part of an interconnected network, the greater their influence. So a power law of 5% says that if you're a staking entity that owns 5%, then you have a positive influence on future upgrades because you're voting on validations, but you're also one of the most important vectors for when Wall Street wants to build on Ethereum. So if you can imagine, if we're a 5% holder of Ethereum and Wall Street is building their future on Ethereum and they're eventually going to stake, then the power law comes into effect because now we can help provide liquidity, staking. We can do a lot of future services because we are staking 5% of each. So I think that 5% is where the power law really becomes significant. And the third thing, of course, to keep in mind is that Ethereum is still generally not liked by institutions because most have bet on Bitcoin. So they're suddenly saying, I don't really understand why we should be caring about Ethereum. As you know, this is why Ethereum is probably falling into the most hated rally, because year to date, Ethereum's up 35%. It's outperforming Bitcoin's 17% gain, but most institutions have zero exposure. That's why Cathie Wood says Ethereum, she thinks, is the institutional blockchain, but nobody really owns Ethereum except really the retail investor and, of course, now Bitmine.
Right. Yeah, and it's funny because we've seen Ethereum drop over the past couple of days, but when I look at the ETF inflows, I saw $500 million, $443 million to be exact, of net inflows from the BlackRocks, the Fidelities of the world. So it is quite interesting, the algos that are part of the crypto ecosystem. Obviously, those algos can go up or down, but there is a bid that is being put on this asset class. Tom, should people be worried about dilution? One concern I've had about it is, hey, Tom Lee raised $20 billion. If ETH goes up, he might, or BMNR goes up, he's going to dump shares, which is inevitable. That's kind of the function of the treasury. But is that something people should be scared about, or should they be looking at the rate of growth of ETH per share, which is going to outpace any of the dilution that happens?
Yeah, well, that's exactly the thing. A proper Ethereum treasury raising capital actually is anti-dilutive because the ones that are executing it properly can grow your Ethereum held per share. If your Ethereum held per share is going up, none of the capital markets is dilution.
Right.
That's what I think fundamentally people need to understand the model. Now, if Bitmine was trading at or below its Ethereum holdings, that should not be a time to be raising capital because that's dilutive. So any ETH treasury trading at NAV is diluting shareholders essentially by raising capital because, you need to be trading at a premium. Right. In fact, Bitmine has an opposite view. We have a $1 billion stock repurchase program in place because if the stock becomes too cheap relative to its ETH holdings, it would make more sense to actually buy back stock. So there is zero intention for Bitmine to ever dilute its holders. And actually, I think it's been proven because, again, on July 8th, there was $4 of Ethereum held per share. And today, 7 weeks later, there is $40 of Ethereum held per share. So a shareholder on July 8th, if they looked at their forward multiple, they paid $4.50 for the stock, when in just 8 weeks, there would be $40 of Ethereum held per share. So the company massively grew ETH per share. That's accretion, not dilution. A dilution would be that if 8 weeks later, we still had $4 of ETH per share, because then we'd be like, we're better off buying the ETF. In this case, we've proven you've been far better off owning Bitmine than owning an Ethereum ETF, because you still only have $4 worth of Ethereum per share plus whatever price Ethereum changed at.
Right. It is quite incredible the rate at which you guys are growing your ETH per share, and the rate at which and the capacity at which you guys have to raise capital. I guess, like, final two questions here. How are you guys raising this much money? Like, are these meetings just they believe in your thesis, or are you seeing that demand from investors that want something alternative to equities, given equities have done so well over the past couple of years?
Well, it's, if you can imagine, we're doing a lot of institutional investor meetings, and these institutions have to catch up to understand what's happening with Ethereum. So we're explaining to them what's very evident: the project crypto and the Genius Act, and of course the growth of stablecoins, and why this is both good policy for America, but also it's a huge opportunity. And then they're going to say, then they ask, what can they buy? Well, a lot of institutions can't buy Ethereum outright. They can buy futures, but then they don't really own something. They're just buying a derivative. So they can buy an ETH treasury. They want to buy the largest and most liquid one. We are the most liquid because, as you point out, we're like the 10th most liquid stock. So they can get in and out without question. And so it's really natural. I think that's why there is this alchemy taking place where institutions are saying, well, if I need to get into Ethereum, and by the way, it's the most hated chain. I'm just going to tell you, if you think that stock market's the most hated, Ethereum is institutionally been left for dead. No one's cared for 5 years because they've been either buying Solana or Sui or Bitcoin.
Right.
But now they're realizing there's a lot to, and as you can see, Ethereum's transaction activity is really starting to pick up. So it's truly happening. Well, then they need to find exposure. So that's why these meetings are quite easy, and that's why we're able to raise capital.
Okay, last question for you, Tom. I can hear your Slack's going off. You got to get out of here. Really appreciate the time that you spent on the channel. It means a lot. Price targets for end of year for Ethereum and the S&P 500, and your logic for those two.
Yeah, I think Ethereum, in the near term, 5,500 should be happening in the next couple of weeks. But by the end of the year, I think it should be closer to 10 to 12,000 for ETH. But it's because most of the move in crypto does come in the fourth quarter. So if you're up 35% year to date, well, if you're going to be up 200%, it's going to all happen in the next few months. And for the S&P, if the Fed follows through and begins to cut, which is our expectation, and then we get a drop in mortgage rates and the ISM turning up, and therefore financials really begin to participate, I think that's why we get to 6,800 or so on the S&P. So still a lot of upside. Of course, as you know, September is the month everyone's going to be worried about. So that's a month where you might get a pullback, but you need to be buying that tip.
So the seasonal weakness in September, you would say, would just be another opportunity.
Yes, that's right. And as you know, every pullback, everyone has been ringing the bell saying it's the top. That has always been a dip buying opportunity since 2022. So I just say keep that in mind, that you really should be buying a dip.
I love it. Tom Lee, thank you so much. Last time we talked in your offices, Granny Shots was at 1.5. It's now at 2.3 billion in AUM. So congratulations on all the success, and thank you for taking the time on the channel today.
Yeah, thank you, Amit.
Thank you. Bye-bye, Tom.
Thanks. Bye.
All right, folks. There you go. That was Mr. Tom Lee. And I think we talked a decent amount about Ethereum and got the conversation in a lot of different areas around that asset class in and of itself. I think the core thing people wanted to know is, why would I buy BMNR over Ethereum? What is that ETH macro bull case, which I think we got to hear broke down in a really simple way around Wall Street's institutionalization of the blockchain as a payment rail, and which ends up benefiting Ethereum. And then overall, this whole dilution thing, because even I've been confused about what are the dynamics between dilution, net asset value, but I think he broke it down pretty clearly. It's like Ethereum's been able, or the BMNR has been able to uniquely have a go-to-market on acquiring Ethereum that has been value accretive versus value dilutive. And that is, why the stock has maintained momentum, and that's why Ethereum is continuing to gain visibility. So exciting stuff. Exciting stuff. Thank you, everyone, for all the thank yous and congratulations. It was awesome. Tom is a He's a legend, and just so grateful that he took the time to be part of the channel. And yeah, dude, that was cool. That was really cool. Ethereum right here, 45.19. That's up 2.6% on the day. If he's right about 5,500 near term, I mean, BMNR is going higher. And if he's right about obviously S&P 500 closer to 7,000 by the end of the year, that September weakness, whatever it may be, September historically tends to be down about 1% for the month. It looks like that would be a buy the dip as well. Also, I didn't say right or correct or any of those random words that I said on our podcast like 50,000 times. I think I had like one right in there. So I think that was, I saw you guys spamming right and yes and correct in the chat. I was trying not to laugh because you guys, but yeah, hopefully I didn't annoy everybody with saying that. I just let him talk and we got to hear what he had to say. So good stuff. Cool. That was fun. All right. I think that's it. I think that the head nods were going crazy though. That's true. The head nods were going crazy. Falling Knife, thank you for the $200 super chat. Thank you for helping me with my covered calls yesterday. Appreciate you, Mid. You're a covered call. DGen and investing is way more fun this way. Pumped to have you and BMNR too. Let's go. Falling Knife, appreciate it. This is the person, by the way, I mentioned to you guys last week who like made $100,000 off covered calls. He made another $200,000 yesterday off covered calls, and he saw my covered call tweet on Twitter, and he never knew about it. And he tried it for the first time, and you know he has $5, $6, $7 million portfolio. So when you have that much money, it's easier to rake up hundreds of thousands in premiums. Obviously, there's risk associated to it as well, but yeah, it's been doing well for him. So thank you, Falling Knife. Really appreciate it. Thank you for being here. Thank you for the super chat, and congrats. Covered calls are a game changer. Dude, at the Miami meetup, the amount of people literally were taking out their Robinhood accounts and showing me the money they're printing on covered calls, 10,000 a month, 20,000 a month, 7,000 a month. It was incredible. I really do think it's one of those strategies that, again, there's risks associated with it. And one of those risks is you could lose your shares and the stock could rally another 50%, and that would suck. But if that's the worst thing that could happen, which is that you make a profit but make not that much of a profit, or the other risk is that the stock completely tanks and all you get is the premium, but then you have to be doing covered calls on the right shares, obviously. You have to pick the right stocks. But that seems way more risk mitigated to me than a lot of other option strategies in the market. So we'll be talking more about that throughout the next coming months, and I'll have more content coming out on that as well. Corey right here, 94, Nebia 71, SoFi 2614, S&P 642, SBET 1946, Lemonade 5384, and then you have Palantir right here, 160.50. Palantir is also green on the day. All right, cool. I think that's it. I think that is it. Thank you, everybody, for being here. I'm seeing a lot of comments on just like great job on the questions. Hopefully the questions were good. I'm usually very self-critical on myself on these questions, but I think the questions were on point. Like I think we got to ask about the V-shape, ask about the most hated rally, ETH. We went deep into dilution, the overall thesis for Ethereum. We kind of got to talk about the institutional lack of interest, which is also eventually going to create the institutional FOMO. So I think those dynamics were there. So I think, what was that, 25 minutes? I think the 25 minutes hopefully was solid, and we got a lot of good questions in there. So there you go. All right, cool. Yeah, I'm seeing a lot of comments right here saying questions were good. All right, good. That is my job as an interviewer, to try to make sure we can get the best out of the guests with the good questions. And so hopefully it was good for everybody. All right, folks, that's it. Guys, I think I am not going to do a market close. And the reason for that is because you can tell in my voice, it's still not recovered. And I really don't think that I should be pushing my limits right here on the voice. Otherwise, I'm just going to lose it for the rest of the week. And like, that's not a good thing. So I don't know, dude. Maybe we do the market close, but like you can tell, you can already hear it right here. In the morning, it was even worse, and I saw so many comments saying, "Dude, you got to drink some water." And I drank some water this morning, but like I can't, like, you know, it doesn't happen overnight. I think we might not do the market close today. Also, we have Nvidia earnings tomorrow, which is massive, and we got to do that. So, I mean, we'll see as we get towards the end. I'm not sick or anything. I'm just thinking like I need to shut up. Like I just like when I go live, I can't shut up, you know. So, and yesterday I did the podcast with Tanner and Roy. I probably shouldn't have done that podcast, but like I really wanted to do it because, you know, it's been a week and those are my guys, but like I probably should not have stayed up talking for 2 hours last night again. But I think we might have to chill out for the market close today. So, all right, that's it. Thank you, everybody. I think Trump is live in his, he's about to be live in his cabinet meeting. So there's no point for us to really watch that. It's just going to be everyone telling him he's the greatest. So if you want to watch that, you can watch it on his channel. But if there's any specific comments from there, then we'll talk about it tomorrow and see if there's anything important to cover from there. Okay, cool. That's it. Thank you, everybody. Appreciate it. Big day for the channel. We got Tom Lee. Hopefully he's on more often over the coming years. And hopefully we can keep expanding some of the guests that come on the channel. And you guys will be able to get a lot more value from the people that that come onto the show. Again, thank you for everybody who came to the Miami meetup. If you are curious about my thoughts on Miami, in the market closed yesterday, I spent about an hour talking about it, showed off a bunch of the gifts that you guys brought me, and showed off just like the level of just energy and time and dedication you guys put into some of these gifts. I mean, it's deeply, deeply humbling. And I talked about the experience. So if anyone wants to listen to that, you can listen to that there. And hopefully we have more meetups in the coming months and we can keep doing it. Word of the day. Okay, so I missed it on Friday. I know a lot of you guys got mad. By the way, shout out to Brandon. Brandon is someone who comments every single day on this channel about the word of the day. I hope he's here watching. If not, you guys might see his comment on the video after it's posted. But every day he comments the word of the day. And he was at the meetup and I saw him. I was like, hey, what's your name? He's like, Brandon. I was like, yo, what's up? And then he used one of the words of the day. I was like, wait a second, you're that Brandon. And it was so cool to see him in person and see the guy who makes sure to keep me accountable to use this word of the day every day. So shout out to Brandon. Word of the day is, this looks like B times to me. I'm probably going to be wrong. B times. B time.
Betimes.
Bedtimes. Okay. Bedtimes. There's kind of like if there was a D there, it'd be bedtimes, but the D's not there. So I went with B instead of bet. But bedtimes, early and in good time. They rose betimes, hoping to glimpse the comet before the first light. I mend broken ties betimes, so old grudges don't weigh me down. Betimes is early or in good time. So although Tom Lee was not early on the show today, he took the time out of his day to show up, which is what I deeply appreciate. By the way, guys, for those, getting mad that he was like, some people were like, oh, he wouldn't be late on CNBC. Dude, I'm sure that CNBC has had a scheduled appearance for Tom Lee and they have had to move it back and forth. Like, this is just what happens when you're super busy, right? Like when you're super freaking busy, you're going back and forth. Like, it's not something to be upset about. It's something to be grateful that someone is even taking the time to give you their time. Because I remember, dude, our podcast started like 15 minutes late. It was supposed to start at 3. We started like 3:15 back in July because the guy had meetings. He had the Wall Street Journal, then he had this, then he had that, then he was this. Literally, his phone was ringing in the middle of our meeting. He was trying not to check his phone. So he is one of the most genuine, down-to-earth, and humble guys. And that means if we have to wait a little bit longer to get him onto the show, I'm just grateful that he's on the show in the first place. Yeah, and it happens on CNBC all the time, dude, when you have guests. Like, that's just the nature of the media business. The question is, can you entertain your guests in the middle of that dead space? And obviously, given, the humor from myself, it's not that hard to end up doing that. So and that's what we got. Oh, let me show you guys one thing. Hold on. I gotta get one thing. Let me show you this in a second. For those that didn't see the stream last night, there was a gift that a nice couple from Miami got me. Shout out to John and Cher. And this I'm showing because it absolutely will be in the background at the new apartment. And it is something that is just so freaking cool. All right, here we go. Ladies and gentlemen, we have currently right now, officially, in neon lights. So there you go. Absolutely crazy. Super, super dope. And yeah, this will be in the background of the new apartment. So that's super cool. That's super, super dope. So I'll be designing the entire background this entire week. And yeah, Monday, August 1st, we'll have our first stream. So it'll be fun. All right, folks. Thank you. I think we will skip the market close today. I think I really just need to shut up for the next 24 hours and just not say anything. I can already feel it right now. My throat is, starting to get itchy. And so, yeah, I think we'll skip the market close today, but we'll be back. tomorrow, market open, and keep going from there. All right. Thank you, everybody. Appreciate it. Did I say August 1st? I meant September 1st. I meant September 1st. Yes. September 1st. First stream, September 1st, new apartment. Love you all. Appreciate it. Thank you all. Got Tom Leon. Hopefully we get a lot more people onto the future of the show. And we'll keep going from there. It is kind of crazy. Just like, you know, this show had 40 people watching back in 2022 in September. And, you know, you kind of keep going. You kind of keep going. That's it. You just kind of keep going and you figure it out along the way. And then one day you might end up with Tom Lee coming on the show and getting to talk to your entire community. And it's just really special. So deeply appreciate everyone who supported, and let's just keep going. Let's just keep going. Thank you, everybody. Appreciate it. I'll see you guys tomorrow on the Market Open. Bye, everyone.